All right, guys. We are awake today. Whew. All right. All right. Let me get this out of the way. All right, guys. Today we got GDP, ADP, non-farm employment change data. Where's Nvidia? Nvidia all the way at 485s. All right. Almost 486s. Yeah. So today we got GDP data dropping at 8:30. We got ADP non-farm employment data dropping at 8:30. And yeah, we'll see if we get anything good today, man. Yesterday was a crazy good day. Yesterday the market flew. Hey, what's up, Kevin? Yeah, do me a favor, bump that like button. Good morning. Way to the long day Tuesday was. Yeah, the data honestly was good yesterday, man. Or not good. The market flew yesterday. The market was great yesterday. This PayPal down. Nvidia almost back up. Will it break back over 500? It just kind of shows you how volatile it is, to be honest. Hey, as long as you hit the like button, Drake, it's all good, bro. Um, yeah, I'm looking up ADP data. Expectations for ADP data. It's kind of like prelim payroll data is 195. Target ripped up yesterday. Beautiful green trade on that for me. Hey, what's up, Alyssa? We're gonna do a poll. Does GDP come in higher or lower than the expected? I think it's expecting 2.4%. Um, I think it's expecting 2.4%. Yeah, 2.4% is what's expecting. ADP employment change is coming out at 815. Uh, Expectations for that are 200K. So we're gonna do a poll here. Let's see. So yeah, it's 2.4% quarter over quarter. All right, so we're gonna do a poll here, higher, lower. I don't know is an option on the poll. Hey, what's up, Joseph? Yeah, we're gonna get some music playing here too. Tesla up to 255s. Let's look at the SPY here. Honestly, I'm in Tesla too. That's nice. SPY back up to almost 450s. Looks great. All right, guys. All right, so let me put some music on here. See if we can get anything good. Let's see beats. And let me know if you don't like the music. We're gonna put beats. We're gonna put let me fix this. Let me fix this. All right, so again, non-farm employment data drops at 8:15 Eastern Standard Time. GDP data drops at 8:30. Drops at 8:15. I'm sorry, I hear the echo. Let me fix this. Sorry, I fixed the echo. My bad. All right. Yeah, we'll put the expected numbers up. GDP data is expected 2.4%. There we go. You can see that number there. Well, what I'm seeing on both metrics that I'm using is 2.4% for GDP and non-farm data expected at 195K. We also have pending home sales later on this morning. What's Roblox doing? I got a $30 option. Hey, what's up, Kay? What's up, Rain? Bullish or bearish, guys? Let me know. Looking at our poll, we got a couple votes already. 50% think we're going to come in higher for GDP. 30% think we're going to come in lower. I don't know if a higher GDP reading will necessarily be as good as people might think it will. The main reason behind that is like inflation worries. You know, we did have data come out yesterday, specifically the JOLTS report, and that data did show the market still could be fearing inflation because JOLTS data came in under expectations, and the market ended up loving that. That's ultimately what helped spark this huge bull run in the market yesterday. And honestly, the post I made yesterday on Twitter is very telling of like all of this stuff. So like if you look at the post I made on Twitter yesterday, apparently BitBoy, I'm sorry. Yeah, what I'm wondering with the BitBoy stuff is
Check it.
But yeah, we posted this yesterday. Is Bitcoin pumping up? Yeah, Bitcoin all the way back to 26.5K. But yeah, we made this post yesterday, and this post is still very true. So again, and you can kind of see what I'm talking about here. So again, we made this post yesterday, and it's so true regarding markets. You can see I said this is very true of sentiments of markets. Remember, many have been saying we are going to crash for a year plus. We have not yet, and in fact, the market is very green on the year. When in doubt, zoom out. And so this was when the SPY was at 442s or so. And so you can see I said this before this crazy run, and you can kind of see this is really what I see as a creator here. I genuinely see this as a creator in which, you know, people are saying we're going to crash for months and months, really the last year. And then when we finally start to pull back over like a 30-day period of time, they're like, aha, see, I was right. And then when you bring attention to it, when you're like, well, no, like this is just a small little pullback we're in right now. This doesn't mean crash. They say, oh, well, this is just the start. And it's like, all right, well, I think yesterday kind of proved that wrong. We're back up to basically 450 right now on the SPY. The S&P 500 sitting currently at about 4,500. So just big action here. AMC has been the weakest stock in the market lately, diving all the way down to $11, under $11 a share at 1090 yesterday. So that's interesting to pay attention to and watch. Yeah, and again, if you haven't already, hit that like button, hit the subscribe button. We appreciate it. Hit the notification bell. Let's bump those like buttons up if we can. I see 26 likes. We can do better than that. Let's try to break 50 at least. The European market, which the regional is already is in a recession, has surpassed ATH. Yeah. Anticipate bull. Yeah, I mean, I think the momentum is on the upside currently for sure. I definitely think the momentum is on the upside right now. The question is, does it get there? You know, and I'm not sure. Pull my Discord up. Hey, what's up, TK? Well, no, I agree 100%. Great American. I mean, that's kind of my point, though, is that my point is, even if we crash right now, the same people that are going to say, aha, see, I told you, have been saying we're going to crash for the last few years. And so even if we crash now, their accuracy is pretty light. And I guess my overall point there is like, don't like the reason, like you hear me kind of like a broken record with this, right? You hear me say this over and over again. And I genuinely am trying to help new traders with this, because this is something in which stopped me from getting involved with the market earlier in terms of investing, which is the biggest statistical edge you'll ever have in the market. Again, I day trade. I love day trading. I do it every day. I've got some great sponsors and some great resources for day trading. And you know, I day trade every day and I love it. It's my first love of trading, if that makes sense, right? But I also think that traders should hedge long-term with investing. And I think that if you're not, most of the retail traders that are not investing are not doing so because they watch The Big Short and Michael Burry comes out telling them the market's going to crash. And like he's been saying the market's going to crash for the last few years. And so at a certain point, you got to say, hey, man, you were wrong about this. Let's not stop retail traders from investing. Like, there's a very famous saying, and it goes something like, your entry doesn't matter in investing, your exit does. Something like that. And so I think, you're not going to be able to time the market perfectly every time in your entries for investments. But if you hold it as an investment, as you should, the entry will be less significant. It won't matter as much. Hey, what's up, Beach? Hope you're doing good, brother. Y'all go check out Beach Bum's channel. He's got a great channel. Y'all go hit the subscribe. He's got great swing trading content, man. His swing trading content is top notch. Y'all check it out. You should be able to just click his name, go to his channel, hit the subscribe button. Okay, so I see some people saying that Tesla batteries don't last as long as people are claiming. Musk claim that Tesla batteries last 300 to 500,000 miles. 99% of owners don't see anywhere close to that. This Model Y owner is on his third battery at 100K. Yeah, but is that standard? So this guy Facts Chaser is putting out some interesting stuff regarding Tesla. Tesla all the way back up at 255 though. My average on Tesla is 227s, and so my average is looking pretty good. Stats show they only dropped about 12%. All right, guys, so we're at 449s on the SPY here, 449s. We'll have to do another poll regarding that. Just bought a Model S. I love this thing. Trying to figure out how to move in this car. Yeah. Where did VFS go? I was thinking about buying put options yesterday. Ooh, and I should have. Oh, man. Oh, dude. I'm still mad, bro. Did anybody tell? Listen, that I said it could be at this number. I said it's going to be at 50. Man, I got to go find that clip. Yesterday, I was like, this thing is almost certainly going to be at like $50 within a couple days. I said $50 exactly. Where is it sitting? It's sitting at $50 right now. Ah, man. It hurts. It hurts. I should have taken the trade, man. It hurts. Ah, such an easy short. Such an easy short. And the rest of the market was flying up too. So it's not like this is market related either. Oh man, it hurts. Ah. Yeah, I don't know any funded account companies for crypto mania. I know you can trade in Top Step. You can trade Bitcoin Mini. You can trade crypto futures to a certain extent. Although I don't know what the liquidity is like, but I know you can on Top Step. Mm. So yeah, Tesla's market cap is now back over Berkshire. But man, I wanted VFS short. I wanted put options. I should have taken the swing. Yeah. So VFS is a company, I believe it's a Korean company, if I'm not mistaken. But it is a company that IPO'd a couple days ago. And this thing IPO'd 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days ago. Less than 2 weeks ago, this company IPO'd VFS. And this thing has gone from basically, its IPO price at like $11 or whatever it was, all the way up to $93. And again, yesterday before the opening bell, like in pre-market, before options are actually open, my viewers and I were talking about this. We were talking about VFS and like what it meant. What I said is that put options specifically, have got to be crazy expensive because it's incredibly probable that this thing was going to pull back some to like $50 is what I said. I said $50 is what I thought it would pull back to within a couple days. Again, I'll have to go find that clip. And so yeah, imagine me and I wanted to buy options, but I assumed they were too expensive. I assume that the odds of them or the Greeks were not going to be favorable for me in options, and I'm probably right. So it's not the biggest miss, but man, to look at it this morning and see it sitting right at $50, it's just like missed opportunity. But hey, it's all good. A little frustrated, but that's how it goes, I guess. Yeah. Oh, it's okay. It's Vietnamese. Gotcha. Yeah. Well, I'm not going to buy a $50 call option. I would buy like a $75 call or put option if they had something. Again, it was just so I was ready to short it, but it's all good. Again, there's a lot of risk that comes with that, so it really is a gamble. All right, so the hurricane is a Cat 3 and predicted to strengthen as it hits the shallow waters of the Florida Panhandle. They're telling us to expect 110-mile-per-hour winds. And this is by a guy called Pack. So yeah, it looks like it's going to hit Florida pretty rough. So Miami's going to have a new sales and service center, 78,000 square foot. Hmm. What a day yesterday, man. The markets flew up, and honestly, I'm pretty green and everything yesterday. Yesterday, I made over 1K, and just my swing trades, so that was nice. Honestly, I'm in a pretty flat PayPal trade. My average is like 62, and that's the thing I'm down the most on. Everything else, I'm pretty much flat, straight flat. I'm still hoping Roblox. Like I do have some options on Roblox. Uh, the option expires. It's a October 23rd call option. So honestly, we still got like a month and a half to 2 months, and I think this one has a pretty good chance of being green. We just depending on what the Greeks are, which I looked at once before. But we'll see how that one turns out. Let me know what you guys think about that. We're looking at what everybody else says. I guess the big question with GDP today is, do y'all think today's gains or yesterday's gains hold the market today? Let me look at the poll. So the poll, we got over 100 votes now. 52% think we're going to come in higher than expected for GDP. And again, if we do, the real question is this, okay? The real question is this. If we do come in higher than expected, is that good or bad? Does that make the market go up or down? I think that's the real genuine question here, is that if we do come in higher than expected, does the market go up or down? Again, yesterday we had JOLTS data come out, right? So JOLTS job openings are economic growth gauges, right? So the higher JOLTS are means the more economic growth we have, like the more hiring that's going on, and ultimately in turn more spending that happens. And so with JOLTS data coming in lower than expected yesterday, again, the market pushed up big on that report. Now, I'm not going to say the market's rip yesterday was purely from the JOLTS report. We also had CB consumer confidence data as well. But the point is, we had economic data that came in better than expected, signaling more economic signaling less economic growth. Not better than expected. I'm sorry. So we had economic data with JOLTS and CB consumer confidence that both signaled less economic growth, and the market flew up on that, which again could signal that the market is fearing inflation and they do not want economic growth, because more people working means more people spending. More people spending means higher prices. Higher prices equals higher inflation. It is inflation. And so, yeah, that's kind of the nuance of this today with GDP. Again, a lot of people thought we were going to be in a recession by now. A lot of people here, which have kind of, you don't really see them much anymore, but a lot of people said we'd be in a recession right now, and they said GDP was going to come in bad, and maybe it does today, but GDP is the expectation, at least for GDP, is much higher than they expected it to be 3 months ago or so. So yeah, we'll see what we get. Let me know what you guys think. Again, bump that like button here. I would love to break 100 likes before 7, which we got 5 seconds, so I don't know if we're going to do that, but hurry up and like right now. Do it now. Market's definitely got jolted. Yeah, the market flew up. Yeah, I like Roblox too. And we got a couple months, or a little bit less than a couple months to let it play. So, yeah, we'll take profit if it starts to rip, which hopefully it does. I think Roblox is cheap right now, and I'm not a big believer in Roblox. My son famously called Roblox short at $80, and he was absolutely right. He said he thought it would be half the price in a couple years, and now a couple years later, Roblox is about half the price it was. So shout out to my son, Jack. Oh, man, my legs are sore, dude. Whew, my legs are sore. September will be a red month. Well, historically, it usually is a red month. So typically, it's a red month. September is one of the worst months historically for the market. Yeah, kids know things. Well, you trade what you know, and Jack knows Roblox. Yeah, and this is why I don't short big blue chip companies, man, because nobody freaking knows, dude. For whatever reason, man, people just get super push of bearish sentiment, and like again, it's fine to be bearish short term. Like it's fine to be bearish on any particular day, like any one day, it's fine to be bearish, right? What's not okay to be bearish is just, I mean, it's fine to be whatever you want to be. All right, like listen, take whatever side you want to take in terms of up or down in markets, but understand if you bet short long term, you're playing against the biggest edge you get. And so it's kind of a sucker's bet. It's a rookie trade where you're betting against the market long term. It's something that people that don't truly understand the market do. And and then when it doesn't work out, they usually cry manipulation. Like, oh, the market shouldn't be going up right now. And usually they're just mad they lost or they were wrong. Again, we'll see what happens. But the market shouldn't do anything. Nobody knows what the market's going to do. It's all based off of psychology, and that can be surprising. And so it's not like the market has a specific recipe it has to do. And that's the biggest thing people don't understand. If you watch the movie Limitless, right? I watched that movie the other day or a while back. And one of the things that movie did get right is that the market is not about company health. It's about mass psychology. And yeah, it makes sense. And so I think that's the lens you have to look at it under. Why does seasonality say September is a good month? Well, you can look at this here. Look, I'll show you the data right here. So again, September historically is not a good month for markets, for the stock market specifically. I mean, anything could happen, but it's not a good month for stock market specifically. Let me find it. All right, so again, if you look at like Y charts, for instance, right? This is the best way to look at it. That's not. I want to see a different one. Let me just go to images. Yeah. So again, here is the months on average, and you'll notice a very obvious thing here, which is that there's a lot of different charts. But I think the best looking one, the one to understand really what it is this one. This is done by the Carson Investment Research Y charts. But again, they're talking about September in this chart, but we're going to talk about, or they're talking about July in this chart, but we're going to talk about September specifically. Okay, so July, usually a historic great month. September is the worst month of the year in terms of markets. So this is the S&P 500 index average monthly returns from 1950 to 2022. You can see September is the worst month of the entire year, only followed by slight red action in June. In February, sometimes, depending on which one you look at, can be a bad month as well. We can look at some other examples of this, but they're all basically going to be telling you the same thing. This is the one that I was the most familiar with, and this is up to 2009. But again, this one's very accurate as well in terms of like monthly gains. Again, if you look at September up until 2009, September gave you a average loss of 1.16%. Only following the second largest one in February by 0.3%. And so regardless of which data, I guess the first one was probably more relevant because it's more recent. But the point is, September is a historical bad month for markets. It's not a good month. It's generally a month in which the market struggles. And so, again, the big pump up yesterday heading into September will be interesting because, again, the day after tomorrow is the first day of September. And so it'll be interesting to see what we get. And yeah, let me know what you guys think. Market just usually goes the opposite way where most people think it will. Absolutely. Yeah, I honestly, I agree completely with what V said here, which is that the market is usually contrarian, essentially. He says medium and short term, long term, it will go up because of inflation, growth of investments, and dividends. Yeah, it's just money. The dollar loses value as time goes on because of inflation, right? And so markets in turn are going to move up long term because of that. And again, betting against that is incredibly risky. A lot of people think, like, the funny part about it is like a lot of the bearish traders long term think they're betting against the US or whatever it is, right? What they're really betting against is inflation, right? So if they're actually right and the market doesn't go up long term, that means inflation is getting much better, which is, kind of inverse to how a lot of people think about it. But yeah, absolutely true. The other thing, like, the market can be very contrarian, and you see that a lot with, like, again, heading into the big slump a year ago, right? So if we look at the SPY and we look at a yearly chart, maybe a little bit longer term than that, but heading into this slump, people were really bullish, right? Heading into this big slump right here, a lot of people were super bullish in markets, and they were telling everybody how great the market was. And then when you zoom out even more, once we had this big dip, everybody turned bearish. Everybody saying, "Oh, the market's going to fail." I had so many people here like, "Yeah, the market's going to crash. The market's going to crash. The market's going to crash." And that's all they would say, is the market was going to crash. And then what does the market do? It does the opposite. It ends up having a huge run all the way back up to the 550 level. And again, very contrarian. And so the more people I see betting on one specific side of the market, the less confident I am in that direction ultimately. But anything can happen, and I think you always have to have an understanding that, no matter how good your technicals are, no matter how good your bets are, no matter how good your analysis is, the market can freaking do anything. Nobody knows. Nobody knows if it's going to go up, down, or sideways. GDP conventionally quantum, lower GDP is better. Or no, I'm sorry, opposite. I'm sorry, I don't know why. Conventionally, higher GDP is more economic growth, right? It's GDP, it's the gross domestic product. The higher the number, the more economic growth we're seeing. And so conventionally, that's good. It means economic growth and market growth and all that good stuff. But if the market is really fearing inflation, price increases, the market doesn't necessarily want GDP to be higher sometimes, because higher GDP signals higher inflation and worse inflation problems. And so it's nuanced for sure. Yeah, again, the weak JOLTS report and weaker CB consumer confidence data was interesting. Again, the market pumped up on weaker data, which means that the market could be fearing inflation heavily. And if that's the case, they might react positively. The market, that is, might react positively to this GDP report if it comes in under expected. So, yeah, I mean, that's another nuance of it. Again, yesterday, JOLTS and CB consumer confidence data signaled less economic growth, and the market pushed up big and reacted really positively to that. And so, again, the question is does the market behave the same way today, in which if we get lower than expected GDP, the market pushes up? It's possible, but again, nobody knows. And, reactionary mindset is good with this type of stuff. Instead of trying to predict what this number is going to be and take big options or big trades ahead of it, which is just kind of a sucker's thing to do. Again, nobody knows. The edge is not super big taking bets ahead of this report. Instead of trying to do that, just get yourself in a reactionary mindset. Try to find a trend after it happens and maybe play that trend or reversals or whatever you want to do. That's generally going to give you much better results. Yeah, all good, Sync. All right, guys. So yeah, SPY right at the VWAP here. Part of me wants to hold this dip and buy this dip, but ICCT. Yeah, I don't know anything about this company, but yeah, a lot of the time, this is the problem with penny stocks, right? Like penny stock day traders. And again, I'm not against them. Like people get weird because they think I'm just hating on them when I'm not. But like the problem with penny stocks is like you might have a great system, a great pattern, but they're not stable, right? So like you might be able to make a bunch of money. Say you're in the stock long right here. Say you're in the stock long, you're trying to day trade. This is a like a good looking bull flag, right? So this is a bull flag, a beautiful bull flag too. I'm sure a lot of day traders were in this thing. And the problem with penny stocks, and the reason you don't see big money trading it, is because the risk is so profound, and that's what they don't tell you. Is so like say you're in this thing long and you get stuck in this halt, bro. This thing could resume down here. This thing could resume anywhere. You know what I mean? And like you could lose everything you invest in it. So say you buy thousands of shares of this, man, you could lose thousands and thousands of dollars quickly. And you could be green on the year and now all of a sudden lose everything based off of one crazy occurrence, which happens a lot in penny stocks. Like this is not like an uncommon thing. So just be smart. T1 halted conversion. Yeah, well, something messed up. Today's definitely pulled back to some point and retest highs because no buyer interested stepping in buying something real. Yeah, maybe. Yeah, VFS also, man. I'm still kind of bummed I didn't buy that option, but VFS all the way down to $50. I wanted to buy it, but I stopped myself. Here's the Q. Q testing VWAP right now. Again, there's AMC on the right. We could look at like Apple. Here's Tesla. Tesla all the way up at 255. Tesla looking really strong as well. Hey, what's up, Cal? Investing in penny stocks is even worse. Quantum. I think the odds of making money investing in penny stocks is under, I would say under 10% of people investing in penny stocks make money. Because you got to understand, like these are crap companies. Again, think of what the Wolf of Wall Street, and again, I disagree with Jordan Belfort in some ways, but like what the Wolf of Wall Street said regarding pink sheets, penny stocks, like low float, low cap stocks is absolutely true. Is that people are selling garbage to garbage men. There's a lot of sensationalizing, a lot of hype, a lot of BS about these stocks. You look on YouTube, you got YouTubers saying that these penny stocks are going to 1000x and all this crazy stuff. And there's so much marketing being pushed out for them. Almost none of them succeed long term. If you look at every major penny stock that people have called out, right, that they've said we're going to go to the moon, BBIG, prime example of one. That's the long-term chart. You look at, there's so many examples of this. SOS, that's the long-term chart. You look at, what's another penny stock? CEI, that's the long-term chart. And so this is where they go. This is what happens to them. And so people think they're going to get rich investing in them, but most of the time they're total crap. And like, you're not going to make money investing in them. Like you can't treat them like they're Apple or Disney because a large majority of penny stocks will fail long-term. Sure, you might get lucky and pick one that goes crazy, but again, it's kind of a lottery ticket. Like it's not going to mean anything, and you'll probably lose money. Understand the odds. Only invest in what you're okay with losing, I guess is the point. No, I mean, depends on the penny stocks. I disagree as well. I think you can look at a stock and it can have the best due diligence ever. And again, people are going to tell you it has the greatest DD ever, the greatest info, and that it just depends on the penny stock. Understand, like most successful companies did not start off as penny stocks. So like most successful companies do not start off as penny stocks. Most of them IPO and immediately are above penny stock status within the first day. And so they're going to tell you, oh, all big stocks started as penny stocks. Again, that comes from a fundamental misunderstanding about markets. They don't. And so just be careful, man. Again, a lot of people think they're going to get rich. They can't help it. They just see something cheap and they want to buy it. I guess the point, here's the easiest way to look at it, right? If you diversify into 10 different blue chip companies or the S&P 500, right? If you diversify and you hold, right? Even if some of those individual stocks fail, you're almost certainly going to make money if you hold it 5 years. You're almost certainly going to make money diversifying and buying 10 different 10 different blue chip companies, 10 different large cap companies. If you do the same thing with penny stocks, where you buy 10 different diversify into multiple different penny stocks, you are almost certainly going to lose money. And so people think just because they have a small account, you have to invest in penny stocks. You could buy 5 shares of Tesla and get way farther, 5 shares of Apple and get way farther than you're ever going to get buying 100 shares of some obscure penny stock. So again, trade at your own risk. I'm not trying to hate penny stocks. I'm just being honest. Yeah. Again, it's all good, man. Do what you want, Quantum. It's all good, brother. Maybe I'm wrong. It's possible. I don't know. But I don't think I am. Yeah, I don't know what the stats are for investing. I know, again, from a YouTuber's perspective, right? I've seen so many people come to my room and push these, and they're really emotional a lot of the time. They're really like pressuring. They're like, buy CEI, this thing's gonna moon. And I'm like, and I'll just be like, CEI is crap. And they'll be like, aha, I'm gonna come back in a month and say I told you so when CEI is at $6 a share. CEI today is at 44 cents right now. So I guess when you see it so much, when you see people like push these sketchy companies, and then you watch with the companies that they were so adamant about what they do long term, you start to realize, okay, like most of these are going to fail and they're just emotional because they've spent money on them. All right, so crypto exchange Binance is going to stop supporting Binance US dollar in 2024. Why? Did they any reason for that? Yeah, I guess they're trying to avoid getting sued by the SEC like everybody else, I guess. Yeah, so Nvidia just set a new all-time high closing price. Is that true? Yesterday at 490, basically 485. Did they never close above that? I guess not. Yeah. Let's see the open. Yeah. Yeah, Nvidia right back up there to 490s. All right, so Twitter obtained a license required for crypto payments and trading. Hmm. Yeah, again, let me know what you guys think. What do you think is going to push up today? I'm watching Roblox right now. I'm also kind of green in Snapchat, which is nice, man. We bought that a while back. It's not a huge position, but we are green in it. Twitter, what did you say about Twitter? Twitter got licensing for crypto payments, is what I read. Again, I'm not sure if it's true. Anyone to see Zach Morris lately? Yeah, it's one of the reasons, like, man, a lot of people don't realize, like, the traders that are really pushing penny stocks too are pumping and dumping them, right? So they're pumping them up and then dumping them on unsuspecting people, and they just get stuck. All right, guys. So yeah, I'm also watching Target. Target, we made a bunch of money, scaled out of yesterday. So excuse me. CEI last year. Yeah, CEI has been a pretty well-known one. I don't know. All I know is Australia's big on mining stuff. Mining might be okay. Quantum. Again, I'm not hating. Like, mining companies might be different. But I've seen a lot of mining companies go by the wayside too. Oh, Max? Yeah, he's supposed to buy me a Beamer if CEI ever did anything. What do you think? What are you feeling on Rivian? I think Rivian's got a pretty. I think Rivian will probably be okay long term. It's one of the few EV companies that I think will probably be okay. But I'm still skeptical because I just don't trust up and coming EV brands right now. I just don't trust them. Yeah, so Nvidia closed at a record high, sending AI to 1.2 trillion market cap. Yeah, Rivian's gapping up today. So yeah, Rivian is moving up. Check it. Yeah, so I'm looking at yeah, so Tesla, guys. The question is, does Tesla hold its gains? Tesla up to 256, almost starting to make another push, almost back up to the volume weighted average, or over the volume weighted average price, almost back up to the previous closing price. Yeah, the market had a crazy good day, man. Yeah, I don't know, man. I think I don't know if it's suspicious sync. I think a lot of people bet against Nvidia because they thought it was up too much, and so you got a lot of people that want Nvidia to come back down just because they're bearish on it. And again, I'm not saying that's you or anybody. I don't know, but I know how many. Like generally, what happens is like when a company pumps up like this, right? Like say a company does this, makes a huge move. Generally, that big move causes a lot of people to bet against it, right? So people start betting against it up here. And then sometimes we'll do a little dip and people will get excited thinking they're right. And then it'll just keep on moving up. And if it's something as groundbreaking as AI influence over chip makers like NVIDIA, there is a great chance that it's just going to continue rising. Maybe it doesn't. Again, the PE ratio is still very high, even with the newest earnings. So it's something to consider there because, again, the question really with NVIDIA is, does it continue rising? It's already up a ton. If you look at a yearly chart on NVIDIA, you can see it started the year right around 150 bucks, 140 bucks. Not the year, I'm sorry. It started 52 weeks ago. It was right around 150 bucks. It started the year at about 160, 140 actually. So it's gone from 140 to $500 in less than a year. Which is pretty big percentage gains, of course. That's huge percentage gains. And so the question is, how much does AI influence things to a point where does it influence things to a point where NVIDIA just keeps on running, keeps on increasing? Again, we'll have to wait until next quarter to see what numbers they put in then. But a lot of people are going to be waiting on that as well. Tesla might have some influence over AI also. What I do know is that Tesla is very volatile. Yeah, Carvana came back from the brink of failure, which is impressive. They were about to fail, basically, and they ended up succeeding. So they came back from the brink of failure. Yeah, we're going to put a timer up we got non-farm data at 8:15. Non-farm data at 8:15. And then we've got... we got non-farm data at 8:15 and then GDP data at 8:30. But yeah, NVIDIA is still pushing up, almost back up to 590s. Just went green on the day too. It's kind of dragging everything else back up. But yeah, NVIDIA is starting to go green on the day. AMC still looking really weak. So if GDP is lower after wages decreasing, isn't that very bearish? Not necessarily. So like Jolt's report came out yesterday and the market reacted positively to it. And it came out under expected. So it signaled less economic growth, basically less job openings. That caused the market to react pretty positively. So what that could mean, and again, I'm not saying it's what it does, but what that could mean is that the market is fearing inflation more than anything else, and the market does not want to see big economic growth. I think recession fears, especially with the Fed, what the Fed said, still could mean the opposite of what I just said as well. But, I think, there was a chance that we were going to hit a recession this year, and that chance is looking more and more unlikely, especially with the latest GDP expectations, which is 2.4%, which is much higher of an expectation than a lot of people thought we would get. And so those recession fears are looking looking less and less likely. But it's still possible. And again, we don't know what the market wants. We don't know if the market wants higher GDP, lower GDP. I'm going to guess the market wants higher GDP. But it's certainly nuanced, and it's certainly not like a given thing where we're gonna get a super predictable reaction from this. In my opinion, I think anything could happen. So just understand, betting on this specifically, like taking a huge position now and then, it's just a risky thing. I would wait and figure out what you're gonna do after the report comes out. I think with losing that many job openings could mean no rate hikes, and I think that's what's getting priced in. Yeah, it's potential. We could look at the CME watch tool after yesterday's report with jolts. We could still see, though, like a skip or a pause at the next cycle has been pretty likely. At this point, it's at about 86.5%, with only about 13.5% of people thinking we're going to raise rates in September. So, yeah, I mean, right now it's pretty unlikely that we're going to raise rates, but anything could happen. Economic calendar showing non-farm on Friday. So basically what you got to understand is that the procedure of non-farm data, there's a couple ways they do it. Okay, so the first, there's a way they generally do it, and this is what it is for today as well. So every week we get payroll data. We get payroll and unemployment on Friday every time it drops. So it's always on Friday for specifically non-farm payroll data and unemployment data, right? That's dropping Friday. Today, we get the prelim non-farm data. So it's something called the ADP non-farm employment change report. So it is prelim non-farm payroll data. So it's prelim payroll data, but it's still non-farm employment data. It's just kind of prelim data. This one's called the non-farm employment change relative to the payroll one being called non-farm payrolls, right? And so again, if we look at the expectations here for this stuff, non-farm employment change is expected to come out at 195. Last time I was 324, and sometimes it's not always the best. Like sometimes there's not always a super high correlation with like prelim and actual payroll data. And then again, so Friday we got, so 195 is what's expected for non-farm employment change. Non-farm payrolls is expected at 170K. But yeah, that drops on Friday, as well as like private payrolls and a bunch of other stuff too. So yeah, so non-farm employment change, ADP is a payroll service for clients. It measures the non-farm employment change measures the change month to month in non-farm private employment. So yeah, it's used as a predictor of the payroll data, although there's not always a super high correlation, if I'm being honest. And you compare that to like payroll numbers. Payroll numbers specifically measure the change in the number of hires employed during the month previously, excluding farming. So yeah, it'll be relevant. You also have like manufacturing payrolls drop Friday, participation rate dropping Friday, government payrolls, private payrolls, all that good stuff, as well as unemployment. Yeah, all good, Derek. Yeah, we're still in Exxon, man. I've been holding Exxon. We're still in Walgreens. When does Walgreens play out? Dividends. Let's see, they pay. Okay, so yeah, September. The first 2 weeks of September are when I get paid most of these dividends. So I'm waiting. Hey, what's up, Ollie? What's up, Dream? So much data, very confusing. Yeah, I mean, I've learned it pretty heavy by now. Like, I've been covering it for so long that, like, I've learned what it all is, what it means, what the influence is over markets. And I can kind of rank the most important releases with, like, the least important releases if you guys want me to as well. Just because I do know kind of how this stuff moves. Like, I understand how it moves, what it is, and what influence it has over markets. CPI, PPI are probably the biggest morning economic release. So, like, if you see CPI inflationary data or PPI inflationary data, that's probably the biggest. That's probably the data that's going to have the biggest influence over markets short term in the morning at 8:30. right? You also have payrolls and unemployment, which does have an influence for sure, which is Friday. You have PCE, which is tomorrow. It's the personal consumption expenditure. So CPI and PCE are both gauging the same thing, which is inflation increases, right? PCE is the personal consumption expenditure. It's what the Fed thinks that PCE is a better true gauge of inflation. But at the same time, it is a less watched metric. So like the market in general watches CPI much more heavy than PCE data. But the Fed, who might be or should be a more important source of analysis, it weighs PCE a little bit more. And so PCE drops tomorrow. And again, it's an inflationary gauge. What they're expecting for PCE tomorrow is core PCE is the big one, right? It excludes food and energy because food and energy can throw off prices. They're not the most static thing. So it excludes food and energy. And again, so PCE tomorrow is expected to show up month over month at 0.2%. Year over year is expected at 4.2% for core, which is what the most important one. So tomorrow is actually one of the biggest days of the week as well. Tomorrow we've kind of got like the ECB's minutes report. It's called ECB publishes the account of monetary policy meetings, so it's kind of like the minutes report for the U.S. Yeah, and then we also have the PCE core PCE report. We've got jobless claims numbers dropping, as well as Chicago PMI, personal spending, personal income. So that all drops tomorrow, and then Friday, again, very busy day with non-farm payrolls, unemployment, and Canadian GDP, manufacturing PMI for ISM data. So again, just a lot of stuff dropping to Friday. Friday's the biggest day, I think, but PCE is very relevant tomorrow as well. Very rarely do all of this stuff happen in 1 week. And so usually they spread it out and they separate it week to week, but for whatever reason, they did it all in one specific week this week. John, is your timer correct? Yes. Hit the live button. If it doesn't look correct to you, hit the live button. Make sure you're caught up on stream. NVIDIA coming back up. Yeah, I see it. NVIDIA back green on the day, back up to 490s. The question is, does it break 500 today? Is the real question. So the question is, does it break 500 today? All right, so we're going to do a poll here. Higher, lower, as expected. We're going to do. And so again, if you want to vote on this poll, go ahead and heart this page for good luck as well. So again, go ahead and heart this page if you haven't already. Hit the heart button. Have a heart, hit the heart button, and vote on the poll if you haven't yet. Yeah, there's our Twitter poll. Give me a follow on Twitter if you can. We're kind of slowly growing that number. Yeah, we need 3 likes to hit 100 likes. So, hey, do it now. I was trying to make a list of importance. but you were going too fast and jumped around. If you want the list of importance of just broad economic data, not even just monthly reports, but of just broad economic data, if you want a list of importance, I would say FOMC meeting is at the top, followed by CPI, followed by PPI, followed by earnings, like big earnings, followed by payrolls and unemployment, followed by followed by PCE, I would say, and then GDP data, and then everything else, then PMI and other stuff. That would be my list of like big relevant stuff all the way back down to the bottom. NVIDIA coming back up. Yeah, NVIDIA back up to 490s. Again, we're pretty flat on the day. It could be a worse day, but we're okay. We're not super red. Very green day yesterday as well. What's up, Tobias? We also have, understand, guys, so the ADP non-farm employment change data, which isn't the payroll data. It's kind of the prelim payroll data. It's at 8:15 market time. So that data releases at 8:15. It's not the biggest release. It's not going to be the biggest influence, but it should move a little bit. It should move markets a little bit at least, I would say. 15 minutes later is when we get GDP data. So we get ADP non-farm data at 8:15, and then 15 minutes later we get GDP data as well. So yeah, but gee, that's not the biggest release. What's up, Tobias? Quantum. One. Yeah, I'll give you a list. This is the list that I see in terms of relevance and importance. I would say that's the list. That's basically the list right there. If you want a list of like importance, I would say that's like the biggest list right there. And all of these drop monthly, except for the FOMC meeting and earnings, which drop. FOMC drops every 6 weeks. Earnings drop quarterly. But everything else drops monthly. So CPI, PPI, PCE, GDP data, unemployment data, manufacturing, PMI. Jobless claims actually drops weekly, believe it or not. So all right, so again, NVIDIA just tapped 490 and then pulled back a little bit. Tesla's still up there. Again, if we look at the Q or the NASDAQ here, Q at 374.20s. I can type fast. I'm not trying to toot my own horn. I'm definitely one of the fastest typers in the world right now, for sure. Definitely top 3. No, I'm just kidding. Definitely top 10, maybe. No, kidding there too. I would say I'm probably top 5,000. But too bad there's no real skills that involve typing fast, unless I want to be like a court typer or whatever that is. Yeah, I don't know. We'll see. Anytime I get posted in another language, I'm always trying to. I'm always trying to translate it, but I don't. Who was going where and had a migraine, Paulo? What are you talking about? Hey, well, good luck, Charles. There are plenty of fast riders. I'm a rider myself, but I freaking hate riding. Like, I can ride okay, but I do not like it at all. It just feels like work to me, All right, team. Yeah, team. Again, I'm trying to be patient here and wait for this GDP report. We might trade a little bit, though. The ADP data actually drops pretty soon here. It doesn't, it drops pretty soon. So the ADP data drops at 8:15. So that's really in like 25 minutes. We'll see how much of an influence that has over markets. Anything could happen here, but again, we'll see. Look at the Q move up. Look at NVIDIA push up as well. Again, the Q at 374s. NVIDIA all the way over 490s. Again, $500 is probably the single biggest psychological level in this NVIDIA chart right now. And with it pushing up, I think $500 is going to be the real test of it, in my opinion. But who knows? But I think $500 is obviously a pretty relevant spot. Yeah, definitely type 3. Make sure we get a typing test done. I don't know. Sometimes I can type fast. Again, there's no real option. People said I was girly when I was like, yeah, I could type fast. It's like, bro. All right, so let's give me a 1-minute test here. The problem with these ads is that the whole house thinks like everybody's a trader. Like they send my wife trading ads. Like my wife cares about trading. All right, here we go. Dude, they keep hitting me with freaking dinosaur. What is these words, man? Oh, they keep hitting me with dinosaurs, which is not a word I'm familiar with. Oh my gosh. See, that threw me off, man. Honestly, I could usually type better than that. They just hit me with like 50 examples of dinosaurs, dude. Ugh.
As I'm in the midst of applying.
Oh, dude, it tries to get me to watch an ad afterwards, too. That sucks. But yeah, that one was bad. Again, they hit me with dinosaurs like 12 times. They hit me with dinosaurs like 12 times. Okay, so yeah, this one I got 72 words per minute. You can see my fastest was 93. Could be faster. Freaking yeah. Pterodactyl, bro. Who knows how to spell pterodactyl? Again, what it really is it's all muscle memory, right? So it's like I remember how to spell certain words, and so I can kind of just go like that. But if they hit me with a word I've never spelled before, and I don't really know how to spell it, like freaking pterodactyl. I know how to spell dinosaurs, but like, ah, yeah, for sure. I had zero typos though, 72 words per minute, no typos. But I think the proper way to do it would be to just would be to not correct my mistakes and just kind of keep going because I think I'm gonna make it up with easier words, you know. Yeah, definitely top three excuses ever for sure. All right, guys, we got 7 minutes before 8 a.m. for the scrum. Market's actually starting to bounce back a lot. Look at the Q all the way back up to 374.50s, 374.50s. So the Q's moving back up here. We'll see if it hits it, but 374.70s on the Q. Nvidia all the way up at 491s right now, so still moving. What time is it? I'm in Texas right now, so it's about 6:53 market time, or 6:53 a.m. I start the stream at like 5:36 a.m. But yeah, Nvidia is still surging up. It looks good. PayPal, I was down on this one a little bit more earlier. I made so much on Target yesterday. I scaled out of most of that position. I could have held it a little bit longer. I think Target pays divvies in a couple weeks too, but it's all good. What do you think gold will do? Where's gold at right now? I think gold's been bouncing back recently, hasn't it? Yeah, gold's been bouncing back some. If we look at slash GC, which is gold futures, gold pushing back towards 2000. You know, it's at 1967 right now, 1967. So we'll see if that one continues. But again, most of the market is reeling up from Nvidia right now, which is absolutely surging up over 491s as we speak. Yeah, I don't think Texas is a country. I was just being specific about where I am because we have different time zones here in the US. Only 25% of chat likes. Yeah. All right, look at Q and Nvidia, guys. Q up to 374s. Is there anything else dragging this up? Is it like Tesla? Tesla's on the rise here. Here's Apple. Apple up to 184s. Again, here's Amazon. Amazon trying to go green on the day. There's Meta, Google. Google very green on the day as well. Beautiful day for Google yesterday also. Again, pretty bad day for AMC yesterday. Again, it was kind of a flat day, but it was still slightly red. It looks like looking at a 10-day chart, man. What a chart for AMC. This is AMC's chart right now. Over the last couple days here, man. What a brutal drop. Well, Texas is large enough to be its own country. Good morning, John. Do you have an opinion on futures related to the dollar, i.e., US dollar versus others? Well, generally, the Dixie and the market are going to have a negative correlation. So, like if the market rips up, the dollar index is usually going down and vice versa. So, if you look at DXY or whatever the symbol is on your chart, the dollar went down yesterday. So, if you look at like the Dixie here relative to what the market did, here's the NASDAQ versus the Dixie, right? So, here's yesterday. This is yesterday. And then here is a same chart. Where's an hour? There it is. Here's the same chart yesterday on the Dixie. So the Dixie did this while the Nasdaq did this yesterday. So there's a negative correlation with the dollar index in the market. So the dollar index moves down, the market moves up, the market moves down, the dollar index goes up. Generally, not always. It's never a 100% correlation, but it's pretty likely at least. Yeah, so German CPI is expected to show up at 0.3%, 0.3%. I'll cover that too if you guys want. It's not really going to have an influence over markets, but I'll cover it nonetheless. All right, so Hurricane Idalia is forecast to hit Florida. Nvidia almost to 492s, pulling back a little bit now at 491s. How do you think about picking up Hawaii Electric at these levels? I don't trust it. Too much volatility there. I think anything could happen, and so it's just too much risk. It can make big swings to the upside or downside, and it's just too risky for me personally. Yeah, TOS loads the dollar index. You put a money sign in front of it, and you type in DXY, and it'll show up. It's at 103.50s right now. Um, all right, so here goes German CPI in less than a minute. All right, we're at 491s. All right, so here goes German CPI. That data just showed up. It came in at, let's see what it said. Bro, my computer lagging a little bit that's a first. All right, so German CPI just showed up. Oh, we also have mortgage data that just dropped today too. So mortgage data just came out. German CPI showed up as expected at 0.3% on the year. It showed up at 6.1%, so 0.1% higher inflation in Germany than expected yearly. But on the month, it came in neutral as expected. We also had NBA 30-year mortgage rate. So mortgage rates stayed the same at 7.31%. They're still not dropping. Hey, what's up, Chris? AMC is riskier than Hawaii. Yeah, I mean, maybe. I'm not sure what's more risky. I know they're both pretty risky right now. All right, so the Q just dipped down a little bit under the VWAP. Big drop though. The Q is pretty rangy here still. Under the VWAP though, it's generally a really weak sign, but we still have 15 minutes before non-farm data comes out, and that might influence stuff as well. So again, non-farm data drops at 8:15. All right, so we did a Twitter poll regarding GDP. 63% think we're going to come in higher than expected for GDP. 21% think lower, and only about 16% think we're going to come in as expected here. Very large pullback. There's the 8 a.m. scrum. You might see some candlestick action here. But look at Nvidia might be a little argument for a dip buy at this previous level if it holds. But the Q, very choppy, very sideways. Not really interested in taking a trade based off of this. And there's the bounce in Nvidia. And again, if you want to vote on our Twitter poll, I definitely appreciate it. You can check out the link right here. Yeah, hit that like button, guys. Again, non-farm data drops at 8:15, so that drops in like 12 minutes. Not the biggest influence, but GDP data will be. Again, Q all the way back up. So this 490 level looks like a level that it's fighting right now. Again, you can kind of see 490 right here. I'm going to activate this and lower this down a little bit so we can see this specific level. Yeah, so 490 looks relevant. Q bounced right back up. We can also look at like Apple. Apple technically green on the day, but pretty close to flat in all honesty. Tesla still a little red. But hey, thank you, Ali, my guy. Thank you so much, man. I appreciate the donation, brother. Thank you, man. Shout out to Ali for the dono. Thanks, man. Buying short Q on the way down to hedge my account. Well, good luck. I need $387 today to pass my combine. Hey, good luck, brother. I certainly don't always win. You know, I also trade off stream sometimes too. Like, I certainly don't always win. What's ADP non-farm? It's kind of prelim payroll data is what it is. Can you make a vid on how economic data affects crypto? Yeah. Sorry, the picky grammar person, it would be effect like this, not effect like that. So it's with an A. Effect is with an A. Effect is a verb, usually. Would you explain AMC's reverse split? How has it affected its market cap? Market cap should stay the same in a reverse split. But yeah, so anyways, how economic data is going to affect cryptocurrency? Generally, crypto can move with major markets, not always. If it's like a big release like CPI or FOMC or something like that, a lot of the time, you know, it's going to just be positively correlated with broader markets in general, like, you know, Bitcoin, that is, or something like that. Aside from that, I'm really not sure. You know, there's some other kind of small correlations with like banks and stuff with crypto, but yeah, it's never easy to predict. But generally, I would say it moves with markets. So, like if the SPY rips up big on GDP data or whatever, then Bitcoin will probably move up to a certain extent following it as well, but not always, and it's certainly not a given. Quant Tower's free. Yeah, I'm just trying to help with the grammar. I'm not really judging you. I know. I'm just trying to help with grammar. There's a lot of ways to remember it. The easiest way is affect is a verb most of the time, with an A. Affect with an A. The effect of something is a noun. Yeah, you missed the typing test. Definitely top 3 typers in the world. All right, so 490 seems like a level that is established here. We'll see if it holds 490. We're at 490.02s right now, but we're trying to hold this level. We've pulled back to it. I think we can see the trend here on NVIDIA. So I think the trend is obvious right now. It doesn't mean we're actually in this trend, but I think the trend looks something like this. Right? I think that's the trend right now. And if this is the trend, again, we're right at the pullback level right here. So we're right down to the bottom of that range. We'll see if we bounce up like this. That would confirm the trend if it bounces up. Again, I'm not saying it's going to do that. I'm just kind of putting out some possible reactions here. No, I got 75 or something. Are you still in OTLK? Dude, I don't even know what OTLK is. I've never held OTLK. You must be thinking about somebody else. Number one, I never invest in penny stocks, bro. And this thing is down huge. And so, yeah, never touched this stock from my understanding. Definitely not holding it right now and anywhere that I can remember. Haven't held it for a long time, if I ever held it at all, which I don't remember ever holding it. You might be thinking of somebody else. Definitely top 3. Yeah, I had 72 words per minute with no typos. But I think my mistake is that I stopped and corrected my mistakes, where I should have just kept on typing and let volume compensate for the mistakes. The E-mini and both the NASDAQ are pretty flat right now. We got 6 minutes, less than 6 minutes, about 5.5 minutes. And so the ADP non-farm employment change drops. Again, the expectation for that is 195,000. Guys, 195K for ADP non-farm employment change data. So again, that's the expectation for today's report. It was me pushing it yesterday. Johnny, I'm not sure who you're talking about, but it definitely wasn't me, bro. I don't even know what OTLK is, dude. So you must be thinking of somebody else because, again, Outlook Therapeutics. I have no idea what this company is. Never messed with it, never bought it, never did anything with it. Never talked about it from what I can remember. In chat, y'all can, a lot of you were here yesterday. Have you ever heard me mention OTLK as a company? Because I definitely haven't. So you must be thinking of somebody else, man. Nope. Yep. Yeah, man. Again, if y'all understand my stream, y'all know I don't push anything. I don't tell anybody to buy anything. I don't pump any penny stock. If anything, I'm the opposite of penny stocks. I think most penny stocks are crap. A large majority of them will fail, and it's a sucker's bet to invest in any penny stock. Even day trading penny stocks is incredibly risky, and a large majority of people lose at it. And so I'm not doing that either. I don't really trade penny stocks. Do you day trade crypto? Sometimes. It's a stock which had an FDA. Yeah, again, Johnny, I'm not sure if you're just trying to start drama. Never mentioned it, never traded it, never liked it. Definitely wasn't pumping it. Again, you're welcome to try to find the clip if you think I'm lying. But again, you're not going to find it because I never did, kind sir. I don't really push puts. You can't even find puts on most penny stocks. I just tell people most penny stocks are sketchy and that a large majority of them will fail, and that the Wolf of Wall Street quote about selling garbage to garbage men is true, and that like working class people get taken advantage of by getting sketchy crap penny stocks pushed on them, and then they invest in them like they're Amazon, but they're not Amazon, and a large majority of them will fail. And so buying them and holding them is one of the biggest sucker bets any trader can make, any investor can make in penny stocks. Yeah, maybe OSTK, overstock.com, but I don't even like overstock.com, to be honest. I'm not buying that one either. Yeah, Johnny, it's most likely that you're thinking of somebody else, man, or that you got me mixed up with somebody else. Uh, yeah, but OTLK looks like crap, to be honest. It looks like garbage. That's at 31 cents a share. The daily chart's not that bad, but like it's still not anything I'm gonna touch or mess with. I don't buy penny stocks. I don't like penny stocks. I certainly don't pump penny stocks. Uh 3 minutes, guys, until non-farm data. 3 minutes. Mullen, terrible company. Mullen's crap too. Yeah, that thing went from 150 to 30 cents. Looks like someone went huge into it. Now they're trying to blame me, even though I never mentioned it. Again, the great thing about YouTube is if I was pumping this, y'all can go ahead and clip it, find it. Again, if I was pushing it that much, you should be able to find a clip of it. You're not going to, because I don't think I've ever even mentioned OTLK as a company. I certainly never pumped it. And it looks like FDA seeks more confirmatory clinical evidence. This thing is dumping down 70+%. Looks like crap to me, to be honest. But hey. Now, maybe Vic, but I mean, he's getting me to talk smack about the company. And so it's like, he could get me to talk about it. It's probably not going to be what they want me to say about it, though, which, again, looking at it, looks like garbage as a company. They'll get stuck buying crap like that, too. All right, guys. 1 minute left. 1 minute before ADP non farm data. 1 minute. All right, guys. Here we go. 30 seconds before non-farm data, guys. 30 seconds. And then remember, GDP data drops at 8:30. That's the big release here today. But non-farm prelim payroll data drops in about 20 seconds. Y'all want to make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. Again, you want to make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. All right, here's the release. All right, ADP non-farm data came in under expected at 177K. 177K for ADP data versus 195K expected. Again, 177 for ADP non-farm employment change data, 177 versus 195,000 expected. So way lower than expected non-farm employment change data. Again, 177,000 versus 195K to 200K expected. So way lower than expected non-farm data here. And we'll put this up on screen. And again, now GDP data release comes out. GDP data release comes out in 10 or in 15 minutes now. Yeah, VinFast was a stock that I thought was crap too. I told people yesterday I was interested in buying put options in VinFast. The premiums on them were super high, and one bundle cost like 5K, and so I didn't actually end up doing it. But they ended up dipping down exactly like I thought they would. So, oh well, it's just super. When anything's such a high probability thing like VinFast not holding its gains, options on it are going to be super expensive. But yeah, non-farm data came in. The market is now green technically on the day for the Q at least. Yeah, I don't know anything about that company, PRZ. Just not a company I usually gonna mess with. Seems like a penny stock, but maybe I'm wrong. Yeah, it looks like a sketchy, low liquidity, low float penny stock that I don't really want to mess with. Just looks like crap. No offense. To be fair, the trend doesn't look that bad since like June or July, but long term the trend's pretty rough. All right, guys. So again, 375s on the Q. Look at Nvidia surge up here. It's at 491s here, 491s. All right, look at the Q pushing up on this data here at 375s. Again, NVIDIA testing highs of the day now, all the way up at 491.65, which is the previous high of the day, and it's still pushing up. The Q's moving up. If we look at like the SPY or the S&P right now, it's pushing up as well. Here's the SPY. SPY up to 449.50s here, breaking highs, actually technically green on the day as well here. So a lot of green on the day. That looks good. NVIDIA surging up. That's good too. Apple moving up. Google moving up. Yeah, I'm guessing the dollar index, because it generally has an inverse correlation, is going to be down, right? Moving down with this stuff. And yeah, so again, as I suggested, the Dixie is going to move down because it's got a negative correlation with the market. If the market pushes up, like you can see on the SPY or the S&P right here on the right side, you can see the dollar index is going to move down with it because there's an inverse correlation there. Again, SPY up to 449.50 is almost up to 450 again. Again, NVIDIA is what's helping the market. NVIDIA just broke 492s. The question is, do we break $500 today? I think we could. Well, yeah, a good day for the market is a bad day for the Dixie. So yesterday was a really bad day for the dollar index. Again, bump that like button, guys, if you haven't already. Looking at our voting numbers, about 600 votes. 47% think GDP comes in higher than expected. 34% think lower. And 20% think, I don't know. We got some votes on Twitter as well. So on Twitter, 50% think higher. About 30% think lower. And about 20% think as expected. Look at NVIDIA surge, guys. Almost up to 493s right now. Man, NVIDIA's running. What a crazy move. Hey, what's up, Brandon, Gordon? Yeah, I don't pump any stocks. I don't tell anybody to buy anything. I never do. That's not really my style. Usually, I try to just tell people I'm not an investment professional. I'm not liable. If you lose, don't sue me. I have no idea what I'm talking about. I might be wildly wrong about everything. But yeah. All right, guys, 10 minutes. 10 minutes. We got about 800 people here right now. Yeah, Nvidia starting to move here. Again, the question is, do we hit $500? We also have the SPY dipping down a little bit. I might be able to take a small little day trade playing with this thing a little bit here. We'll see if we do, but all right, E-mini's trying to move up a little bit. Ten minutes, a little bit less than 10 minutes, really. SPY's starting to come all the way back down here, guys. Look at the SPY hitting previous closing price all the way back down. Looks weak. Look at that. The SPY, Q, NVIDIA all pulled back suddenly here. SPY bouncing right at that previous closing price. NVIDIA is trying to hold. If it pops, let's see if it pops up. All right, so again, we do have a move up. Big surge. How do you rank different data releases to their market impact? I mean, I go by both market reaction as well as amount of viewership we have for each specific stream. And so, like CPI generally gets the most views aside from the FOMC decision. Um, CPI, PPI, stuff like that. Then followed by like PCE. I would say non-farm payment and non-farm payroll and unemployment data is generally a pretty big release as well. We got like big earnings like Nvidia, Tesla earnings, Apple earnings are all pretty big releases too. All right, so we bounced right at that previous closing price on the SPY, and Nvidia is starting to push back up a little bit here. So Nvidia is trying to move. Dixie balancing with the market. If you know how to pick good companies, the company will always do better over a weighted index on average. Compare Nvidia gains to Solana. Yeah, but Nvidia gains are a little bit they're kind of an anomaly. I mean, they're not an anomaly, but they're definitely not. You're not always going to get gains like that, and so I don't know if necessarily comparing those two is the right move. I think you got to use like an average of just regular companies outside of Nvidia, because Nvidia is going to have crazy big gains that not everybody's going to be able to ride or take advantage of. All right, guys, we got 6 minutes. Question is, does Nvidia push up more? GDP data drops in 6 minutes, guys. 6 minutes. All right, so look at Nvidia start pushing towards 493s. Starting to make another test. GDP should have a pretty decent impact here. We got 5 minutes exactly left. 5 minutes exactly. Although you never know. You never really know here. Anything could happen. And the GDP data comes out pretty soon. Yeah, will Nvidia hit 500? It's close. It's at 493s right now. It's still got about $7 a share to go. All right, guys, we got about 4 minutes. 4 minutes. All right, guys, look at the SPY all the way back up here as well. And again, GDP data is expected at 2.4% today. 2.4%. Still pushing up a little bit. Nvidia almost to 493s. We can also watch the dollar index, but we got about 3.5 minutes left. 3.5 minutes. All right, guys. 3.5 minutes here. Target actually looks pretty good on the day. Anything else that you guys see? Bullish at 2.4%. I don't know. I don't know what we're gonna get. Again, I don't know what the reaction is gonna be. No, I mean, very, very rarely, Matthias, will you get a leak in these numbers. So, like, you'll get a lot of people claiming there's a leak, and then they'll push one specific, like, agenda with it. So they'll be like, yeah, we got the leak, and the numbers came in way better than expected or way worse than expected. Sell now is what they'll say. But again, they're usually just trying to manipulate people into emotionally reacting. So almost every time they say there's a leak, and very rarely is the leak right. And even statistically, you'd think they'd accidentally get it right at this point, but they never have. And so I wouldn't base any trade off of a leak, in my opinion, because it's very rarely an actual leak, and most of the time it's just bots trying to pressure you into doing something. Again, Nvidia right at the top of the range. The SPY bouncing all the way back over the previous closing price. We got a couple minutes left. 2.5 minutes, a little bit less than that. Make sure you hit the live button next to the play button as well, guys. Make sure you're fully caught up on stream. Again, less than 2 minutes. We got about 1,000 people here. So, hey, if you haven't already, hit the like button, bump that number up, hit the notification bell. We appreciate that as well. SPY just broke highs for a split second. I think it was highs of the day. No, not technically highs of the day yet. I don't know. Let me see. Yeah, I mean, it's not technically highs of the day, but it's up there in the top of the range. Again, a minute and a half left, guys. A minute and a half left. Do you guys think Burry made money shorting? It depends on where he entered. The date of record was June 30th, but I don't think that's actually when he got in. So I don't know. All right, we got 1 minute, about a minute and 20 seconds, actually. Just make sure you hit the live button to make sure you're fully caught up. You want your live button to look like this. So, like, you want your live button to look like this to make sure you're fully caught up on stream so you don't miss it. You want the live button to look like that, guys. Again, SPY starting to surge. Yeah, PCE data is relevant too. All right, 1 minute. All right, guys, 20 seconds, 20 seconds. All right, we'll dismiss my timer here. And again, we got our sources up. We're waiting. We're ready. Let's get our other sources up here. Again, less than a minute. 2.4% is what's expected here, guys. 2.4% is what's expected. Here's the release. And there's the release right there. Goods trades balance came in at minus 91.18. No GDP data yet, but the good trade balance came out already. GDP data. Again, I don't see anything for GDP yet. All right, so again, I think this data came in. GDP data is still not out yet. Let me look at a different source. Okay, so there's GDP 2.1%. 2.1% is what we showed. 2.1%. So lower than expected GDP. And the market is pushing up on this data. Again, lower than expected GDP. And the market is ripping up. There's the link. There's the numbers right there. Again, lower than expected GDP at 2.1%. The market expected 2.4%. Still over 2%, though. And the market is liking this report. NVIDIA just tapped over highs for a split second. This PCE is not really the real one you want to watch. PCE tomorrow is the real one you want to watch. We also have pending home sales today. But yeah, the market likes this report. So less than expected numbers. Retail inventories came in at 0.1% versus a previous 0.3% as well. Good trade balance came in much more negative than expected. And wholesale inventories, again, came in at 0.1%, minus 0.1% for wholesale inventories. Positive 0.1% for regular. But again, GDP came in at 2.1%, 2.1% versus 2.4% expected here. Also, we're going to throw this in sub-only mode, so if you have not already, hit the subscribe button. We certainly appreciate it. But again, GDP data coming in at 2.1%. So GDP sales prelim data came in at 2.2%. It's not the biggest release. Again, 2.1% is what the data showed. And again, the SPY at least is flying up. It's at 450s right now. So definitely a positive reaction to this so far. And yeah, we'll see if this keeps moving. Hey, if you haven't yet, subscribe, guys. We certainly appreciate it. Also, check out our sponsor, Top Step. If you want to day trade these economic releases like I have, we're up small on the day in our funded account, but we are up nonetheless in our funded account today. Again, you can kind of see this data. We are up about $90, $100 on this report. We'll see if we get some good stuff to day trade. But again, in futures, there's no PDT rule. So you can day trade short in futures without restriction. And Top Step's the most legit funded program in the world. They pay out millions of dollars every year to their funded traders. They fund thousands of traders a year. What they do is they give you a demo and they test your skill. Just take in the challenge, build you into a better trader. If you lose, you're only out $49. And what they're going to do is they give you a demo. The base one's $50K as a demo. If you can hit $3K without losing $2K in profit, they fund you $50K with a 90% split as long as you can follow their rules. And again, they pay out millions and fund thousands a year. And in futures, you can day trade the S&P and what's called the E-mini, the NASDAQ, and what's called the NQ. Currencies, gold and silver, and the patterns are very similar to large cap, but there's no PDT rule. And they pay out millions in actual withdrawals every year. They fund thousands of traders a year. It's a great way to learn how to trade with less risk than putting up the money yourself. And most day traders lose, and so this is just a way to limit your risk. But if you're good enough to pass it, 90% split, you get to keep your first 10K in profit. You can check them out right here. They are a sponsor of mine. And so I'm incredibly biased in their favor because they pay me money. But if you want to check them out, here is the link. A great way to help support the channel. Genuinely useful as well. So we've been trading on our funded account a little bit today. It's not really bad data. Again, yesterday was the tell. So like Jolts came in. The Jolts report came in yesterday, right? And what the Jolts report showed, as well as CB consumer confidence, was that the market was fearing inflation. The Jolts report came in under expected numbers, so less job openings, i.e., less economic growth. And the market reacted positively to that, as well as CB consumer confidence coming in under expectations. And again, the market reacting positively. And so what that signals here in markets is that the market is fearing inflation, and that is why the market is moving up more on a lower GDP report than expected. Number one, it's still over 2%, so it's still not bad necessarily, but it also signals less inflation worries with GDP coming in slightly lower. And so that's kind of the nuance of it today. Again, GDP came out at 2.1% versus 2.4% expected. And again, the numbers came in signaling less economic growth, which, as I mentioned, the market is interpreting as positive because of inflationary worries. Palantir on its way back. Those 275 put buys on Tesla for Friday looking scary. Yeah, I mean, put options are going to be looking rough right now for Tesla over the last couple of days. I mean, you still should be in the money, right? 275 puts for Friday. I mean, maybe it rips up. Look at Tesla here. Nvidia is still consolidating. Market ripped up a little bit, but there's Tesla. Tesla at the 257s or so, right around flat. You know, it could. We still got a couple days, so maybe it hits 275s, but it doesn't look like it will. Oh, you can't hear music, man. My bad, guys. I've been listening to music this whole time. Growth is good. Yeah, I mean, again, last time, what did we show for GDP reports? So last time we showed 2.4%. And so we're slightly under last time. But, you know, nobody thought we would be over 2% right now, to be honest. So, I mean, you know, again, people are talking about a recession and those fears. The recession definition is 2 consecutive losing GDP quarters, right? We're not anywhere close to that. And so recession fears are not really here right now. And I think the market overall is fearing inflation, or at least it has been. But the market's up a lot over the last couple of days, so maybe we pull back today. Again, I don't really know what the market's going to do. I know the market is still green, very green on the day, and I know the market pushed up huge amounts yesterday. Nvidia is still ripping up too. Also at Ford, I've been in that one as well. I'm kind of waiting to get divvy payouts in a lot of these too, but we'll see. Yeah, I mean, this GDP data does not signal a recession, you know? people talking about the recession definition changing. I'm not even talking about the updated recession definition. I'm talking about the classic condition, which is just two consecutive losing GDP quarters, and we're not anywhere close to that right now. Again, GDP is at 2.1%, and so that's just not what we're at right now. And again, I think people don't like to be wrong in the market. And so when you zoom out, again, we posted this yesterday, and it's important for people to understand that this is kind of how it goes. So that this is kind of how it goes, because again, if not, a lot of retail traders get talked into just never investing in the market, right? But like if you look at this here, this is really the state of the market a lot of the time. In that, like, when the market pushes up like it did over the last year, everybody's saying, oh, the market's going to imminently crash. The market's going to crash. And even though the market is up huge, we make a little dip over a 30-day period and people are like, see, I told you the market was crashing. And it's like, well, no, you said it was going to crash way back here. And then they'll say, oh, well, this is just the start. And again, they've been saying this entire time right here. The entire time the SPY has ripped up such big percentages over the last year. A lot of people have been telling people the market's going to crash. Why do you think that is my question. Again, people say they're contrarian, right? But the reality of it is the market has had huge gains over the last 52 weeks. Over the last year, the market's up dramatically, big numbers. With that, at a certain point, corrections are normal. Like, pullbacks are going to happen. Who do you think is missing out on these big gains that we've made over the last year? Retail traders who have been pressured to not buy and to miss out on this big move because they're told the market's going to imminently crash, and they have been for years by people like Michael Burry and other people. And again, I'm not saying I disagree with them, okay? But what I'm saying is, like, don't miss out on the biggest statistical edge the market gives you, which is that the S&P 500 gives you 6 to 12% on average every year, and that includes crash stats. And so what that means is that on a good year, the market's going to push up much more than 6 to 12%. And if you follow the doomsday whisperers, who always universally say the market is going to crash, you're going to miss out on the biggest statistical edge. Even if I buy today and the market crashes tomorrow, historically the market rebounds pretty quickly from crashes, usually within a few years. And really, if you look at a longer term chart on the actual market, like here's a weekly chart, the market is kind of on its way out of a little mini crash we had in the early 2020s. In 2021, we already kind of had a little mini crash where the market did drop, 10, 15% and maybe more. And we're kind of on the way out of that now. And so maybe we do crash. I wouldn't hold my breath waiting for it. But maybe we do. I don't know. Let me know what you guys think. Do y'all think we're about to crash? Again, I don't know. I know the SPY just ripped back over the previous closing price, back up to 449.60s here, heading back up some. Yeah, I've seen so many sell it all comments. I have too, man. People pressuring people to sell. And then again, the market's pushed up like 15% since they said it. Yet we get a 2% pullback. They're claiming they're right all of a sudden, and it's fine. Again, take whatever bias you want, whatever sentiment you want. Again, as long as y'all understand, the market's probably going to move up long term, and betting against upward movement long term is a sucker's bet. So just be smart. So we're over the previous closing price. Part of me wants to buy the SPY right now. I'm going to wait. We're still a little volatile, but part of me wants to buy the dip. See if we can. Let's see if we rebound back up. Watch Tesla, watch Nvidia. These are going to be the biggest stock influences. AI bubble. Yeah, I mean, I think there is some arguments for AI coming back down and correcting too. I don't know what we're going to get, but I think there are some arguments for that as well. Of course, I'm not saying we don't crash, and that's what people misunderstand. What I'm trying to make sure people don't do is I'm trying to make sure people don't bet against the market long term, like over a couple years. It's just a risky bet. that mostly, like, again, you might watch The Big Short and want to be like Michael Burry, but that might not be the smartest move because Burry isn't really the most accurate predictor of crashes. He might have called the 2008 crash, but he's called about 15 crashes since then, and he's been wrong about every one. And so my point is, like, just understand, like, the biggest statistical edge in any trading style of any trading period of any market is long-term upward movement in blue chip, large cap stocks and indexes, right? Like, that's the biggest statistical edge. And so don't miss out on that edge trying to be the next Burry, if that makes sense. Or don't get so wrapped up in politics that, like, you miss out on one of the biggest long-term edges the market gives you, you know? All right, so we're day trading on our funded account, and this is our funded account today. We are up about 220s right now, 220 on the day. Yeah, Burry did delete his Twitter, and we talk about this a lot. I don't want to seem like a broken record because I think bearish traders who bet on a market crash a year ago really hate hearing me say this, but it's absolutely true. Burry told everybody to sell. He made a big Twitter post and said sell, like 9 months ago, after the FOMC meeting. And if you look at what the market's done since he said that, the market has flown up since he said that, right? And so what happened is he told everybody to sell ahead of the FOMC meeting. And then the market ended up flying up after the meeting. He got emotional and deactivated his Twitter, deleted his Twitter. And then he eventually came out and apologized, which I can respect about it. He said he shouldn't have told people to sell. But yeah, it is what it is. Again, people can have different sentiments, and maybe we do crash. But, like, trying to pinpoint when that happens is the difficult thing. Everybody thinks they know. They act like the market has to do one thing or the market has to do another. Nobody knows what the market has to do, or nobody knows what the market is going to do. It doesn't have to do anything. A lot of the time it's contrarian as well, and so it'll just go against what most people think. And I think 8 months to a year ago, a lot of people thought we were going to crash, and then it did the exact opposite. The banks put out propaganda saying, oh, the market's going to crash. You see a lot of downgrades and all that stuff. And then the market flew up huge percentages. Who do you think profited from that? The banks did, and so people can say they're contrarian, but just because you're bearish doesn't mean you're contrarian. Sometimes that's the status quo is what's put out there. And you just got to be smart and understand, generally, the longer you hold, the bigger the edge long-term on the upside. All right, hey, GDP data. Let's see if it pushes the market up again. The market's starting to bounce a little bit. But yeah, we got our funded account. We made a couple hundred. Right, 100%, Gordon. Market crash equals the world crashes. The system is very strong and nobody wants this. The market can't rise forever. I beg to differ, sir. When I mean rise, I mean long-term, the movement of the market is up. And again, I think that's what a lot of people don't understand. So again, here's the S&P 500. In the last 20 years, the S&P 500, I think, is like 3 or 4x, right? Gold has like 6 or 7x, if I remember correctly. Real estate has done about the same thing. And these are all inflationary hedges, right? So these are all just keeping up with inflation, keeping up with devaluing of the dollar and price increases. That's what this is, right? That's what investing is keeping up with inflation long term. You can either do it with gold, which again has 6 or 7x over the last 20 years. The S&P 500 is 3 or 4x. Real estate has done similar things. You can buy real estate, you can buy gold, you can buy the S&P 500, you can buy Apple. They're all inflationary hedges. That's what people use them for long term. And because of that, they're going to go up long term as well. If we look at a weekly chart, for instance, and here's the S&P 500. Let me fix this. All right, so here's a weekly chart on the S&P 500. All the way back to 1928. And you can kind of see the long-term edge of the market is up. And let me look at maybe the Q might be a little better. Maybe not the Q. Let me see the SPY. But again, you can kind of go back in time and see in 1993, the S&P 500 was at 44 bucks. It does keep rising. Now it might slump in between there, but it's going to rise. It's about 10x or whatever that is. And generally speaking, it's going to go up long term. Like, you don't want to miss out. Like, sometimes it's kind of breaking even as well. So it's not like it's true gains, right? It's kind of breaking even when you consider inflation and the devaluing of the dollar, right? So it's kind of breaking even. So it's not like, you know, again, one thing you'll hear people say is like, hey, if you invest 50K now, it'll turn into, you invest 100K now, in 10 years, it'll be 300K. And that's great. What they don't tell you is that in 10 years, 300,000 is going to be worth about the same as 100K is today because of inflation and devaluing. So that's what you got to understand, is that it's all just inflationary hedges. You know, people say, oh, we'll save up all this money for retirement. You know, I think you got to look at it in a few different ways here. Number one is that, do you really want to spend all your money saving to live good when you're 65? And so sure, the people that are around 65 are going to say, yeah, absolutely, let's do it. But the thing you have to understand is that even if you take 100K and it turns into crazy, it turns into millions by the time you're 65. Again, just like the last example, a million plus is going to be about the same in 30 or 40 years that 100K is today. And so you got to understand that dynamic of markets where, you know, the market does increase long-term over time. The market does keep going up as time goes on. You might have crashes and dips in between that, but the normal flow of the market is that it's going to go up long-term. Yeah, but I mean, no civilization expands forever, and authoritarianism is the norm, not the expectation. Sure, every civilization is bound to fail eventually, right? But in that regard, if that happens, we got much bigger problems than our investments in the S&P 500, sir. You know, so like if that happens, who cares what happens to our S&P 500 gains? Nobody's going to care. You know, we got much bigger problems than that in that situation. And so it's not really the most relevant, I think, because if that does happen, we got a lot more bigger problems than losing paper money on speculative investments, or, you know what I mean? That's what Bitcoin is for. Hey, Bitcoin has been one of the best performing assets in a long time. Again, Tesla dipping down a little bit. Let me go back to markets. Again, the SPY at 449s right now, 449s on the SPY. So still holding green on the day. Again, Tesla at 256. What's NVIDIA doing? Let's take a look. It's still green on the day in stocks too. NVIDIA dipping down. This might drag the rest of the market back down, specifically the Q a little bit more, but I think NVIDIA is heavily weighted in both. But yeah, we're right around that previous closing price in the VWAP level. Part of me wants to buy the NASDAQ here, but I think I'm just going to patiently wait. We're already up a couple hundred on the day in our funded account. And so yo, do me a favor, hit that subscribe button if you haven't already. Hit the notification bell, guys. I definitely appreciate it if you do. We're trying to hit 114,000 subs. We'll definitely hit it this week. Make it up to 114K. But hey, if you're subbed, announce yourself. Show us you're subscribed. If you're not, everything we do here is free. We don't charge for content. We have no paywalls behind content. We don't act like experts or sell a course or anything like that. We just kind of give people free economic data and content. And if you appreciate that and you just want a good resource and community for traders, that we cover economic data quick and we don't claim to be an expert, don't try to shill a course on you, hit the subscribe button. Team, we definitely appreciate that. And so take the time, hit the sub button. I don't know, Troy. I disagree, man. Max out 401k is fine. But
you're gonna have to pay for that. And again, a lot of people are gonna have better performance just doing it themselves if they know what they're talking about, at least in investing. And as long as they can, the big thing most people like, the reason people give their money to money managers is because they don't have the discipline not to touch it. You know, so like again, the real edge is long term. It's going to keep up with inflation if you don't touch it, if you leave it there. A lot of people don't have the discipline to just take their hands off and not mess with it, right? And so instead, what they do is they start trying to horse around with it and play around with it, and then they lose the big compounding edge that they get from making gains and then compounding over time. It's just, you got to just not touch it. What war, Jonathan? Yeah, no touchy. Again, I wouldn't give my money to money managers. You're going to have a much better time. And again, this was relevant to like, you know, some of my family was asking me about like what they can do with investments. And I told them what I would do if I had like a sum of like 50 to 100K is I would take it. I would diversify into all the major indexes. I'd buy the NASDAQ, the S&P 500, the Dow, and then I'd probably buy real estate and gold. And I would sit on that for 20 years. And in 20 years with compounding and dollar, if you dollar cost average into that over a couple months and you sit on that for years, generally you're going to have a pretty good return on investment. But it's subjective. Everybody's a little bit different. What would you do if you had to hold for 10 plus years? What would your portfolio look like? Would it be individual stocks? Would it be indexes? Would it be real estate, gold? Let me know. Yeah, I understand there's a war there, Jonathan, but we're not. I mean, again, I don't know if we're necessarily in it. It might be causing macroeconomic volatility, but, you know, I don't know. I'm not going to talk about it too much because it's just, it gets a little bit too political for me, but yeah. Look like no landing is out of the picture, I guess. Well, I don't think we're going to hit a recession anytime soon, at least not with GDP data. GDP data is still over 2%. I'm not talking about diamonds. Diamonds have noticeably more risk investing in diamonds. Gold specifically, though, you know, when they took us off the gold standard, that's where a lot of value was lost. And you have to understand, gold is one of the best inflationary hedges historically over like a century plus of data. And so, you know, I don't know what it's going to do moving forward into the future in the more digital age that we're in, but I know historically gold has been a great inflationary hedge. Again, in the last 20 years, gold has outperformed the S&P 500 by a pretty big margin. Again, I think gold has about 6x'd over the last 20, 25 years, where the S&P, I think, is like 4x'd, right? So gold has noticeably outperformed the S&P, from my understanding, and I might be wrong. I don't think I am, though. But I think gold has outperformed the S&P by a decent margin over the last 20. All right, guys, we got about 30 minutes here, 30 minutes. Watching Tesla as well. All right, so Q, man, remember I wanted to buy the NASDAQ. The reason I wanted to buy it, and I didn't, I should have pulled the trigger on it, but the reason I wanted to buy it is because we had the VWAP and the previous closing price coincide right to the same spot. You know, trading can be easy sometimes, and it all involves patience. You know, there's a very famous quote, and it goes something like, trading is not made, or money is not made in trading. Money is made in waiting, right? It's something like that. I don't know if that's the exact quote, but it's something like that. And it's very true because, again, one of my favorite spots is the previous closing price and the VWAP. Whenever they're right around the same spot, you can kind of see they coincide to the same level here. Even if you don't get a big bounce, we did get a nice little confirmatory bounce there. But the point in this is that some traders are watching the previous closing price. You can see it's a historical support level. It's bounced off of it. Other traders are watching the VWAP, the volume weighted average price down here. They're both heavily watched indicators. And so when we get a pullback to that spot where they're both around the same level, you got multiple traders that are watching both of these different indicators, buying it up. Technicals are just based on self-fulfilling, sentiment, right? So if people think an indicator is strong, it's strong. If a lot of people think an indicator works, then it can work. If a lot of people think an indicator doesn't work, then they ignore it and it doesn't work. And so in that regard, a lot of people watch the VWAP. A lot of people watch the previous closing price. And when we get a bunch of different groups of traders all buying around the same spot, you can get a nice little dip bounce play off of those levels. Again, you can use the previous closing price in the VWAP. You can use something like the 200 EMA in the VWAP. However you want to do it, it just gives you a little bit higher probability bounce potential, in my opinion. And again, as I'm saying that, I should have bought the dip, but we did get a nice little bounce regardless of what it does now. I invest long-term in electronics and appliances, buy them, warehouse them, and sell in 10 years for big gains. So the only way I would ever see that working is if you're buying like a very game-changing device like the original iPhone and sitting on that. That's the only way I could really think. But I think there's so much risk that's involved there that the appreciation over the long run is going to be similar to like putting that money in the S&P 500 over 10 or 15 years, but it just has noticeably more risk, in my opinion. If you're talking about a different aspect of it that I'm missing out, that's fine, but it just seems risky and unnecessary. You can probably get the similar returns you want putting your money in the S&P or the NASDAQ over a 10-year period of time. Again, if I'm wrong, I could certainly be wrong, but correct me if I'm wrong. It's all good. Yeah, Phil, we're not going to promote other channels. Yeah, okay. I was going to say I see. Context is so hard to tell through chat, but yeah. I was hoping you're joking because it sounds like a terrible idea, but you got to understand people might listen to you in chat and think that's a good idea when it's not. Again, NVIDIA over the VWAP now. We did get that nice little bounce right at that level that we talked about. Yeah, tech's going to change so quickly. All of that stuff's going to be obsolete. Like I could buy an Xbox today, and in 10 years, that Xbox is going to be 90% less in value because tech evolves too quickly. Like you buy a new computer, that computer is going to be good for like a year or two, and then there's going to be a newer, better version, and that computer is going to be slow in comparison to it. And so any kind of tech is very similar. We don't give out financial advice. I have no idea what I'm talking about, Vic. I might be wildly wrong about everything. Don't copy me. Again, we're hitting that previous closing price now. Again, check out Top Step if you haven't already, guys. We are going to be day trading futures. I'll put this up, the Q and NVIDIA, so we can keep an eye on it here. But we're also going to be day trading. We've had some nice gains in my funded account today. So we've already built up a cushion in this account of a couple $100. NASDAQ looks weak though. Look at the Q right here on the right side. It might be breaking down. NVIDIA is still pulling back some, although it does look like a bull flag. Anything could happen. 490 should be an interesting support level. Let me pull this up and figure out when we want to trade. Gotcha. Let me see. All right, so let me put the NASDAQ back up. Again, NASDAQ dipped a little bit. I think this looks weak right now, though. So I do think this looks weak, but I might be wrong. And again, if you haven't already, check out the Top Step funded account program. Great way to learn day trading with limited risk. Again, I'll tell the story of how I got started trading. When I first got started trading, I was day trading on a platform called SureTrader, which was an overseas offshore brokerage that gave you 6-to-1 leverage and let you trade stocks. I lost thousands of dollars as a new trader. And again, I fell for a lot of the hype and penny stocks and nonsense. Like I watched a bunch of these penny stock gurus tell me how big of an edge penny stock can be and how you can get rich if you just trade penny stocks, guys. And I fell for it, man. I lost thousands of dollars in my first couple weeks. What you realize eventually is that you got to follow big money, and big money most of the time doesn't trade penny stocks. A lot of big money trades futures and large cap companies. That's what people invest in trade mostly, and that's what gives you the biggest edge, in my opinion, although it is subjective, I guess. And so eventually I gravitated to trading the SPY, just the SPY and the Q. But you're restricted by the PDT rule in the SPY or the Q. And so the futures market, you can essentially day trade the SPY and the Q in what's called the E-mini, which is ES, or the NASDAQ, which is what you see on the screen. It's the same price action as the Q. Like you can see the Q right here. This is the same thing. If you zoom in here, big 3 red candles, 3 green, 3 red candles, 3 green. It's the same price action. But this left side in futures has no PDT rule. I can day trade short with no PDT restrictions. And Top Step's the most legit funded program in the world, where they give you a demo and they test your skill. And if you can pass it, they fund you. If you lose, you're going to lose much less than you would putting up the money yourself, most of the time at least. The base combi is $49. And so in that regard, in my opinion, although, again, they are a sponsor, and so I'm, of course, biased in their favor, in my opinion, though, they're useful because of that. And again, if you want to check them out, here's the link. I don't know if it's going to be a low liquidity week, Joe. We got PCE data, GDP data, unemployment data, payroll data, jobless claims data, PMI data, all dropping this week. And so it's actually a pretty busy week in terms of economic data. What that could mean for markets, though, is that the market's more apprehensive ahead of these releases. And so when there's a big report coming out, a lot of the time the market chooses to trade less because of the volatility that happens. Like you could have the best technical pattern in the world, but if this data comes in good or bad, it's going to cancel out that technical pattern because fundamentals trump technicals in terms of market movement short term. And so, yeah, I don't know how low liquidity is going to be this week, but I know we got a lot of economic reports coming out. I lost over 20K in the last year, most of them in natty gas. Now I'm on a different path, still 1 year trading. Yeah, you just got most new traders get a couple different things wrong. The biggest one is they trade too large. Like everybody wants to be their favorite guru and take huge, crazy swings into everything. But like if you're brand new, meaning you've been trading less than 6 months, you should not be trading big. Again, a lot of people rush it, and so it's like they're desperate for money now, they're desperate for validation now, or whatever it is. And again, I was too in the beginning, but because of that, they rush it and they just try to trade really large, and maybe they get some good results in their first couple trades from positive variance, and they think that they're about to just get rich. Maybe they have a day where they make $200 or $300, and they think they're just going to be able to do that every day. Very quickly, the market humbles them, and you realize that like it's not feasible to push that heavy, especially with a small account. You might make money, and then lose your whole account. And so that's kind of how it goes, and the odds are just stacked against you. So just trade small, understand, demo, paper trade, use a funded account program like Top Step. Whatever you want to do, it's usually going to have less risk than putting up the money yourself. Yeah, I mean fundamentals trump technicals long term as well. Yeah, 100%. They just trump technicals. I've had a lot of people argue against that, but it's silly. I think people get really technical and they really rely on pure technicals. But I think if you really want to have a balanced understanding of markets, you have to look at both sides, both fundamental and technical. And you also have to understand the influence that fundamental releases are going to have. You know, the example I always use is like, okay, a stock can have the best technical pattern ever. You know, it can have the best technical triangle ever, the best technical flag pattern, you know, the best dip buy, the best whatever. But if CPI comes in way over expectations, the market's almost certainly going to drop regardless of how good that technical pattern is. And so in that regard, fundamentals are going to be more influential over markets than technicals. And it's something that traders have a really hard time acknowledging that because they rely so much on technicals and they're so biased for technicals that it's kind of like an inconvenient truth, right? They would love to be able to ignore fundamentals and purely rely on technicals. But again, that's not going to be feasible, and you got to look at both. AMC starting to come back a little bit. There's the Q bouncing back up. We're really in a sideways trend here. You can kind of see that sideways trend like this. You know, there's the little trend there. Maybe a bad drawing, but you guys see my point. Remember tomorrow or next week we have Labor Day on Monday, I believe. Sorry, let me exit out of that. All right, so Q pulling back very sideways. Nvidia is one to watch. Nvidia just bounced right at the VWAP here, the volume weighted average price, right around 490.80 or so, 490.80. Bounced directly off of that level. Yeah, so GDP data came out slightly lower than expected here. Let me make sure I got it on screen. Okay, good. Yeah, I got it on screen. Again, so we got a busy rest of the week as well here, guys. So again, we got PCE data tomorrow with jobless claims, which is a big release. We have unemployment numbers and non-farm payroll numbers, the actual non-farm payrolls, not the prelim data like we had today. That drops on Friday. So yeah, we got some stuff to watch. Look like Apple's chart. Yeah, Apple. I'm in Apple right now as well. I've been in Apple. Nice little green trade. All right, guys, we got 17 minutes or so, about 17 minutes. Yeah, we also have pending home sale data coming out today also. Let me see when this data released. I think it's at 10 a.m. Let me make sure. Yeah, so pending home sales at 10. Let me switch. So again, GDP data showed up at 2.1%. Yeah, let me see if we can set this up. All right, so yeah, pending home sales data coming out at 10 a.m. Let me see what the expected numbers are. Give me a second here. All right, let's see. We got non-farm data. So we got pending home sales data. Sorry, I'm looking at these numbers. Yeah. All right. So pending home sales data is expected to show up at minus 0.5%. Sorry, I was kind of working on something in the background. Minus 0.5%. We got 15 minutes until the market opens. Again, mortgage rates came in flat this week. Again, pending home sales expected at minus 0.5 to minus 0.6%. Last time we showed a 0.3% gain. And so hopefully the house prices drop. I'm hoping we do at least. We'll see. What broker do I select? I mean, Solar, that's completely up to you, brother. Again, remember, they are a sponsor, of course, so I'm biased in their favor. I like Quant Tower is my favorite. That's what I'm using here. I think Quant Tower, while it takes a little while to learn, it's the most useful. But again, everybody's different, so the platform you use is subjective, you know. Again, AMC trying to come back up. The Q just cracked under lows again. Again, we're mostly flat though the last couple minutes. AMC back up over 11. Again, Apple still up there, 185s. Tesla still at 255s. Everything's so up though right now. Like it's such a green day for a lot of stuff today. You just gotta be careful. Again, NVIDIA down to 490s. Let's see if 490s is a bounce level for NVIDIA. And I think NVIDIA is moving the markets a good bit recently as well. NVIDIA up to about 491, 490s. What's the dollar index doing? All right, so the Dixie is moving down. So honestly, almost a positive correlation with the dollar index in the market right now, which is it's not super unusual, but it's definitely not common. Yeah, I mean, ahead of economic data, it's a big data release week this week. We got GDP, PCE, unemployment, non-farm payroll data all dropping later this week. Jobless claims, pending home sales in about an hour or about 40 minutes. So yeah, it's just a busy week for economic data, and it might cause apprehension. People are just less likely to trade big because of influence from economic releases messing with their positions. Again, here's the Q bouncing back up a little bit. The NASDAQ. NVIDIA at 490s. There's that bounce level. See if it actually holds. $11 minutes, team. 11 minutes. It's a pretty big data. Week. I'll be right back. I'm gonna run to the bathroom. While I'm gone here, as the U.S. enter a recession in 2024. Bathroom break question. Leave answer in chat. That's my bathroom break question for the day. Does the U.S. enter a recession in 2024? Let me know what you guys think. All right, we're back. All right, so let's read this. Yes, true. No, yep, doubt it. Mild recession. No, I don't think so. Yes, I don't know. Yes, 2024, 25. No, definitely recession in 25. Inflation is peaking, less jobs. Data release top 3. 2024. Yeah, I mean, I think it depends. I don't think anybody really knows, but I think it depends. Depends on what damage we do to inflation. The next CPI report, I believe, is in like 2 weeks. Yeah, the next CPI report is going to be on September 13th, so in exactly 2 weeks. Yeah, and that'll give us some tell in what we might get. We'll see. Again, got a little bull flag here that I can't help but notice. Nvidia did dip under 490s though, which is not good, but it's up so much over the last couple days it might not matter. Hold on 1 second. I gotta put my beautiful face up for a second here while I look at something. Hold on 1 second. Okay. Sorry, I'm kind of looking at stuff. I wish it wouldn't put this on my main screen. Where can I might have to look at this afterwards here. Sorry, team. Okay, sorry. Looking at something here real quick. Almost done. Interesting. Okay, sorry. I can't really tell you guys what I'm looking at. Okay, one more. Almost done. Okay, there we go. All right, I'm done. Sorry. Messing with something business-wise that y'all can't really see. How far are you from the Gulf? I'm in Texas. So I'm in like Houston area. So I'm in southeast Texas. I'm from Louisiana originally, so I'm used to hurricanes, man. I lost my favorite car ever was a Honda Prelude with an H22 motor. It was a 4-cylinder, but it was quick. It had VTEC, which is valve timing, and electronic control. But yeah, man, it was fast. So my dad told me at the time, and my dad told me at the time, he's like, hey, bro, don't take your car out during this hurricane. Go park your car at your friend's house and do not drive it. And so 17-year-old John didn't listen and decided to go out partying with his friends on the eve of a huge hurricane, driving around at 2 a.m. And I ended up going down my friend Kareem Street in central Louisiana is where this was, right? And so I was going down the street, and when I looked down the street, I was trying to go park it at his house. When I looked down the street, I could see there was water on the road, but you couldn't really see how bad it was. And so as I started to drive down the street, the water got to my headlights, and I panicked, and I opened the door, and just water came in. That was the end of that car. Never again. Car was done. You know, it was a 97. It was a black 97 Honda Prelude, I think. 5 speeds. It was a manual. My favorite car I ever had. Yeah, this was it right here. So this is what it looked like right here. Yeah, this is what it looked like right here. Looked exactly like this. All right, Q bouncing back up a little bit. Again, I still see it kind of like a bull flag pattern almost in the chart right now. I'm not really interested in taking any big swings there, but I see almost like a bull flag pattern. Well, it survived, but it was never the same. So like we ended up getting it fixed. Like I brought it to like a shop and they fixed it. So it would start and drive, but it was never as fast again. It was done. The motor was rebuilt, and you know, Just didn't. It just was never as fast as it used to be. Hey, look at NVIDIA rip up over 490s for a split second here. Let's see if this drags everything else up too. My stomach is just in knots today, man. Yeah, no more two-door. It was a fun car, though, man. I had a lot of fun in that car. All right, guys, we got a minute and a half left. Dude, my stomach is in freaking knots, man. Whew. All right, look at the Q. The Q back up at about 375. NVIDIA back up over 490s. Up to 375. Apple up to 185. So Apple surging back up a little bit. Q's moving back up. NVIDIA's moving back up. Tesla falling down a little bit though, but almost up to 185s on Apple. Nah, I've been eating good. I think I drank whole milk yesterday. That might be doing it. I might be lactose intolerant. I started drinking lactose-free milk and my stomach felt much better. And like a bunch of other stuff, but all right, here's the opening bell, guys. We got 30 seconds. Apple looking great right now. Every time I hear the end of that song, I think a car alarm's going off. Yeah, it's not that type of stomach problem, Gordon. It's more so like heartburn, acid reflux. All right, here's the opening bell, guys. So there's the NASDAQ. We'll see if this bull flag that I've been talking about plays out. NVIDIA starting to rip back up to 491s. Again, Apple still testing highs up there, moving up a little bit. All right, consolidation happening right now. So we got a little bit of consolidation. Again, we're up to 185.30s on Apple. Apple is dragging the market back up. Part of me wants to buy the dip just because Apple's so strong and it's such a heavily weighted stock. All right, looking at NVIDIA break over highs as well at 491s. I should have bought the bull flag I was talking about. It's all good, but yeah, I should have bought it. Hey, thank you so much for the subs. Where are we at on our sub count now? We can't be far away to 114,000 subs. Yeah, we need like 160 subs. Don't be stingy, guys. Do it now. Try it one time. It might feel good. Hit the subscribe button. We got pending home sales dropping in about 30 minutes here. Get NVIDIA all the way up to 493s. Let's see if it makes the 500 test. It's getting close. There's 495, 493.50 here. Look at this move on the right. NVIDIA's starting to push. Yeah, vinegar kind of messes with my stomach a lot, though. Apple's still pushing up to almost 186 this year, so we're actually seeing a lot of green action. The Q's ripping up, Apple's ripping up. A lot of blue chips are ripping up with us. Some aren't, but some are. Nvidia's still pumping up. Nice movement. Yeah, Nvidia's still pushing. Look at the NASDAQ surge. Nvidia pulling back to the volume weighted average price level right here. It looks like a dip buy, but anything could happen. I'm going to buy this dip real quick right here, but it's kind of punishing me right now because it's a big dip. Sheesh, man. When a big dip like that happens on the NASDAQ, it's kind of like a deer in the headlights almost, man. So we ended up losing, what, 200 bucks? Big turnaround, though. Big drop. Yeah, we're down like 250 on that. Luckily, we switched from our funded account to a different account. But, man, look at the range in the queue. And so we're just going to sit and wait and see if a reversal happens. NVIDIA is going to be really telling because NVIDIA trying to hold the VWAP right there at 492s. Let's watch the queue, see what happens. So far, we've gotten pretty choppy action. We pushed up big, pulled back big, and now pushing back up. Bouncing off the volume weighted average price, though, looks good. All the way back up. Very flat looking right now, but we are at the top of the range, so I'm guessing bullish. And yeah, there's the bull move. All right, another big pullback on the Q. Yeah, we're going to switch to a different account now so I don't get trapped. Let me pull this up. Again, in our actual funded account, we're up a couple hundred on the day. We're down in our combine accounts today. Let me make sure we're in the right one. Okay, yeah, it's the right one. Okay. Big dips. Wait, I thought I accidentally paper traded in one account. I hope it didn't accidentally take me in my funded account. Let me see. Oh, I dipped down a little bit. We're still up in our funded account. This is what the gains are right now. We're still up 220 or so on the day, 210. But man, this is a weak looking move. We're going to short into this. Look to maybe add to it. This is our combine account, so we got to take a little bit more risk. We've already made money in our actual account. All right, so there's two contracts. We're not going to take larger than this. Flush down some more. It is a risky position, but I'm gonna take half off there, just protect the account a little bit. It's just taking too long to break. Looks like taking that half off was good. We're pretty close to exiting it, but if it pushes up anymore. Yeah, we're gonna cut it. I wanna make sure, now I'm paranoid. I wanna make sure this is not my actual funded account. Okay, it's not. All right, good. All right, so the market kind of looks weak here, but it's a really choppy day so far where the market's moved up a lot, down a lot, up a lot, down a lot. And I'm not trying to push too heavy into all this stuff. Yeah, I'm all right. Trust me, I'm used to losing big and winning big, you know. It's a good thing about these funded account programs. They teach you how to manage like tolerance. Very choppy day, so this is a day that is just eating accounts today, so just be careful. Market's going up and down and up and down and up and down and just not really looking good for traders. Unless you're buying at the bottom and selling at the top. Yeah, market's starting to rebound. Nvidia back up. It's over the previous closing price now. The question is, how far does it go? We're very sideways on the day. Yesterday was a pretty big green day, and so it's not going to be a shock if the market dips. All right, so market's still flat, pretty neutral. We're pretty flat in this account today, too. I guess I'd like to give it time to break down because I think a downtrend looks present, but anything could freaking happen here, so. All right, so we're effectively green on this account now. Trading the E-mini here if you want to see it. Slightly green, not a huge green, but green nonetheless. We're up about 150 or so, but we have a cushion. This is what I'm trying to build up here. It's a risky day though. A lot of upward and downward price action, a lot of choppiness. So it might be best today, guys, just to sit on your hands if you can, but who knows? Maybe you have an edge in this. I don't think my edge is super high. I mean, on this account, we're 3-1, but we lost some on the other account, and we made money on our actual funded account as well. So it might be one of those days to just limit your risk. Right now, this price action doesn't really look the best because, like, if you look at what it's done since the opening bell, this is basically it. You know, like that doesn't look like super favorable price action. GDP Hamza is out. Yeah, so GDP's out, bro. Again, very choppy trend. I'm kind of just sitting here hanging out. All right, we're testing that previous closing price on both the Q and the SPY today. We might take one short here. Anticipating maybe a rejection off of the previous close, but it's only going to be one trade. one contract, and we do have a cushion on the day now. What we're anticipating here is the Nvidia stock breaking down, but it doesn't look like it is. Okay, we're back down again. Yeah, I'm going to cut this. I see Nvidia start to surge back up. And so, yeah, we're actually pretty flat on the day now. We're down 20 bucks. But, yeah, it's one of those days. No trends forming yet. And yesterday was a really big green day, and so we could just be settling down from that. Again, I'll say it again. I would limit your risk today. Not really the easiest day to trade. All right, my hands are kind of off now. Too much of a flat day. Market looks weak. I'm tempted to short again, but you know, we don't really have any edge. I think, at least for me, I don't personally see much edge. Yeah, GDP, I mean, it helped the market a little bit, dirt bike, but it wasn't the craziest reaction for sure. Yeah, I got to kind of wait for it to settle down. While we have a minute, guys, check out Chart Prime. You know, Chart Prime is a trading view indicator service. So this is a sponsor of mine. And so as I always tell people with sponsors, I'm biased in their favor. Okay. This is like the third or fourth plug we've done in like 3 or 4 hours. So we're not doing like people are gonna be like, oh, you sell too much. But like this is our third or fourth plug all day. But with that said, again, this is Chart Prime. It's a trading view indicator service. So you can use it in stocks, crypto, Forex, futures. Genuinely useful for me, at least. And again, I can't fake what I'm showing you. So this is an hourly chart. It's slowly growing to be my favorite way to trade. If you look at a 1 hour chart, this is the E-mini. So this is the S&P 500. Number one, you can see the Market Dynamics Pro will show you like these patterns. So look, here's the triangle pattern they draw for you. And so you can see where the top of that line is and all that good stuff. But they also give you like buy and sell signals, right? So strength or weakness signals. And again, I can't guarantee you're going to make money, but look at this sell signal here on an hour, hours of drops. Buy signal here, days of bounces. These are hourly. This is an hourly chart, so every candle represents an hour. Sell signal here, literal hours and hours of drops. Buy signal here, literal days of bounces. And again, I can't fake that. You can also use it on a short-term basis, and this is a very small piece of what they offer. Like if we look at the regular market oracle, when we put up like a 5-minute chart, you know, I can look at a shorter term time frame as well. And again, you can see wedges here, buy, sell signal here for Market Oracle Pro. So you can see it on a shorter term time frame as well. And so again, let's look at these. Buy signal here, hours of bounces. Sell signal here, nice drops. Buy signal here. This one, it had about 15 minutes of bounces after the signal, but hey, you can even call this one wrong, and that's still so many right versus wrong here. And again, I can't guarantee you're going to make money. They also have great oscillators. You can look at smart money concepts. You could look at the regular market oracle if you want to see like potential reversals. There's just so much stuff that they offer, and again, it's 40 bucks a month, genuinely cheap, and again, a great way to use as kind of like a little added edge to your channel, to your trading. And again, they are a sponsor. I'm certainly biased. I can't guarantee anything. Can't guarantee you're going to make money or anything like that. Always trade at your own risk. But again, for a sponsor, genuinely useful. If you want to check them out, here's the link. Market's still pretty flat, so y'all haven't missed much with my selling out here for my sponsor. But yeah, market's still pretty flat. You can check out the link right there. Randy, I've got 4 charts up, dude. So yeah, I've got four screens up. I mean, man. So like I've got 34-inch ultra wide that y'all see on the top. I've got a 34-inch ultra wide that y'all do not see on the bottom. I've got a 27-inch monitor, 27-inch monitor. Y'all see 25% of the monitor space that I have, man. So again, to be honest, y'all don't know what I'm using in the background, and I am using Chart Prime to a certain extent. Oh, I still got the bathroom break. Y'all are just going to let me leave that question up, guys? I see it. I see you. Y'all just going to leave it up that way. Yeah, I mean, like I said, like I always say, the example I always give is like the radio. The radio will what? Do a plug every 20 minutes, every 30 minutes on the radio, you know? So like me doing one plug an hour on average. And really we keep them kind of consolidated to the end because at the beginning of the stream, we don't plug anything for the first few hours of the stream. And so to consolidate it towards the end, you know, on average, one plug an hour, I think is very reasonable. I mean, some people just don't like to see other people make money or have success in anything. And so they get weird about it. But like in the end, it is what it is. You know, we're doing this to make money. Anybody on YouTube's doing it to make money. And I would trust somebody more that's transparent and honest about that than somebody that says, hey guys, I'm donating all this money to charity and I'm just doing this to help you. Now buy my trading course for $5,000. You know, I would rather trust somebody that's just real about it, which I'm trying to be, you know. In the bathroom this whole time. Look at the pop in markets here. All right, again, market's still very flat. I'm basically just kind of hanging out here. I just don't trust anything enough to really take any positions right now. Am I red or green on the day? Let me see. Okay, we're slightly red. If you want to see my chart today, this is my trading chart. Looks like the market, which is why you see, like, you want to see when there's no edge. When your trading chart looks like the market, it's probably not much of an edge. We'll wait. You know, once we start testing highs, that's when I say the choppiness could be done, but it doesn't even mean it will be. But like if we start to test this level up here, it's one thing, or if we start to test this level down here, it's another thing. But until then, it's kind of boring. Gotta wait. Here, hold on, guys. Here, hold on. I just heard somebody yell. Man, sorry. Everything's all good. Jack is here today, so Carol, he was trying to help Carol with the squeezing lemon tool, like the tool that helps squeeze the lemon, and apparently Carol's finger got stuck in it. So all right. Yeah, Disney flying up right now. That looks great. Apple's starting to push up again. Market's starting to test these top range levels again. My portfolio is looking noticeably better today. I mean, we're already up a couple hundred on our stock trades today. Oh yeah, PayPal. My trade on PayPal is actually pretty green. Does PayPal pay a divvy? Let me see. 0. Okay, no. So I'll probably take a little bit of profit off of it then. I'm getting much better at being patient on my swings and investments. Take a third of it. Take a third of it off. We'll leave the rest. I've been in Honeywell for like a month, and I've been losing a couple $100 on it. It's finally back to almost flat now for Honeywell. We bought Walmart a couple months ago too, or maybe like a week ago, maybe. And we're still sitting in that nicely green. Exxon, same thing. Target, we're back to green on the day in that one too. I'm gonna hold the rest of Target because it pays out a divvy, and I gotta wait until September to cut it though. All right, so we're at the top of the range. Honestly, I don't trust this market at all right now. I could buy the dip here, and I guess I'll try this, but man, this has just punished me. This will probably be, if this fails against me, aside from pinning home sales in 7 minutes, we're gonna really slow down. All right, well, we just made a little bit. We're back to green on the day, but slightly, just kind of scalping it. I like this little downwick behavior. We also have pending home sales data dropping in about 6 minutes or so. All right, the NASDAQ up some. It's at about 15,500. The Q pushing back up as well. So markets are looking noticeably better. A couple of really nice green days here. One of my investments that's kind of stagnated is Etsy. We've been in this one. It can't move that much though. Etsy. It looked cheap when I bought it, but I bought it at 83s. Luckily, it's tiny share position. And it ended up cracking lows. All right, hey guys, we got 4 minutes. All right, so we got a little break and a dip here. I'm going to buy this dip very quickly. Again, we're trying to have a green day today, and we got pending home sales in a couple minutes. So I just want to scalp this as fast as I can like I just did. So yeah, we're now back up about 140 on this account or so. I'll see if we dip some more and then add it back. All right, so there's one contract. We'll take a little swing here too and bet that this upward trend is going to continue. So we'll add a little bit if it dips down enough. If not, we'll just take small gains from it. All right, there's a little pullback. Still haven't really dipped enough to add to it yet. All right, we'll go ahead and cut that too. So yeah, now we're up about 200 on the day. Again, I told you guys where I would start trading again, which is once we started testing those highs. We finally broke highs. Got a couple $100 in profit on the day. Here's my graph today. Not the best graph, to be honest, but my win-loss ratio is about 3-1. So not bad. We got about 3 minutes left until pending home sales release. I'm holding a little bit of NVIDIA, I think. Yeah, I'm holding NVIDIA. Yeah, I'm holding a little bit of Snap too. Although Snap's pretty flat on the day. Although big range for Snap, just kind of sideways. It's only 50 shares of Snap, which is not a big position here. All right, hey, we got 2.5 minutes. All right, Snap trying to go green on the day, back up to almost 990. NVIDIA still ripping. I should have held on to it. We got 2 minutes until pending home sales report. 2 minutes. All right, a minute and a half. Again, snap up to 990s here, 990s. We got the NASDAQ. $50 seconds left. Etsy technically green on the day now too. Apple's doing nice. And AMC's moving back a little bit. Disney's doing well too today. Gold fighting back a little bit. Exxon, Walmart green, Walgreens green. Tyson chicken is red. Target's green again, another green day. RTX is green. Roblox is green. PayPal is green. Nvidia definitely green. Microsoft green. Honeywell green. Ford is green. All right, here goes the release for pending home sales team. Let's see what we get. Pending home sales expectation is minus 0.6%. We showed 0.9%. 0.9% for pending home sales. Much more positive. Much higher percentage of pending home sales than expected at positive 0.9%, almost positive 1%, positive 0.9% versus the forecast minus 0.6%. And so we'll see if this influences markets. But again, minus 0.6% is what they expected. They ended up showing a positive 0.9%. We'll put this up on screen. You can see this here. That's the number right there. And Google doesn't pay a divvy, so. Sorry, my dogs are throwing a fit. What a day. Another green day so far. It doesn't mean much yet, but the market's up big over the last couple of days. Well, market's looking strong. Nvidia back up to 492s. Still got a ways to go, but a lot of people are watching for 500. Q's looking strong again today. SPY so far today as well. Over 450s again on the SPY. Pretty quick, big move there over the last 2 days. All right, so yeah, that means more homes were under contract month over month to be sold. So pending home sales, so like more 0.9% of homes, a 0.9% increase in homes under contract versus a decline of 0.6% expected is what this report means. We get Nvidia up to 492 still. We'll see if it holds. But with that said, I'm going to go ahead and close this down for the day. It's been a fun day. Market's pushing up some more. But yeah, my stomach's in knots right now. So I'm going to see you guys later. Y'all be sure to check out TopStep. Again, if you want to day trade like I have today, again, in my actual funded account, we are up About 200 and something. Let me see. So this is my actual funded account. We are up about 215, 220 with a 2.5 to 1 win-loss ratio in my actual funded account. In our combine account, we're up a couple hundred as well. So not doing too bad there. If you want to join me and participate in this combine with me, it's a great challenge for traders. It's only $49 a month. It genuinely helps build their skill. And again, what they do is they give you a demo, they test your skill. If you can hit the target while following their rules, they fund you between 50 to 150K. With a 90% split. They are a sponsor of mine. I'm incredibly biased in their favor because they pay me money, but I think it's genuinely useful. So if you want to check it out, link is in the description. You can also find Chart Prime in the description. I love you all. I'll be back tomorrow. Tomorrow we got PCE data, which is the Fed's preferred inflationary metric. Is PCE data. That's tomorrow. We also got a bunch of other stuff tomorrow, a bunch of other stuff Friday. So hey, I'll see you guys later. Y'all be safe. Market's green right now, but it has been a choppy day. And yeah, y'all be good. I'll see you guys later.